Good morning from Singapore. A very warm welcome to you. My name is Elliot Danker, and I will be your host and moderator of today's ASEAN-Korea Global VC Conference. As you can see, it's a very different type of conference this year. It's a bit of a hybrid format where we've got a live studio in Singapore, and we'll be featuring lots of guests from around the region as well. The reason for that really is how COVID-19 has impacted us all. We've seen countries suffer, we've seen economies fall, economies suffer, and the one thing that we've learned throughout this 2020 journey is that regional cooperation among countries, that's so vital and important if we are going to get over this COVID-19 crisis that we are facing. Well, it's going to be a great conference today. We have panel discussions. We'll also see pitches from startups around the region, and we've got some lessons to learn from the year 2020 that will be shared with us throughout the course of the day. So we certainly hope that you will find the program that we have lined up for you fruitful and engaging. Well, we're going to start off the program by having a keynote address from Mr. Jung Hoon Cha. Now, he's the Deputy Minister of Startup and Venture Innovation Office at the Ministry of SMEs and Startups of the Republic of Korea, and he'll be delivering his keynote address live from Korea. Mr. Cha, please.
Thank you. Good morning, everybody. This is very honored to deliver my keynote speaking to all of you. Distinguished guests and ladies and gentlemen, I'm Jung Hoon Cha, the Deputy Minister of Startup and Venture Innovation Office at the Ministry of SME and Startup. I would like to convey my sincere congratulations on the opening of the Global VC Conference today. The Global VC Conference serves as a venue of communication where venture capital of Korea and ASEAN can exchange information and share opinion, and will be held as an annual event starting in Singapore this year. This conference is held on non-face-to-face due to COVID-19 this year, and I would like to express my gratitude to officials from both Korea and ASEAN for the effort you made to put together this event as safely in spite of challenges caused by the pandemic around the world. It is an honor and privilege for me to be with you as I start this meaningful event, which is put together with the participants and effort by many. 2020 is a year of corona pandemic. The number of confirmed cases exceeded 60 million worldwide, and opportunities for exchange were taken away, which led to enormous socio-economic loss. Just as other countries, Korea has been making utmost effort to overcome COVID-19. At the forefront of such effort are the venture capital and innovative startups, which are present at the conference today. In the early days after the pandemic outbreak, innovative startup of Korea shared information in real time through the corona maps and the mask map, and so contributed to easing the public anxiety. Startup in biofield developed case diagnostic kit, which diagnosed the infection with the coronavirus quickly and accurately, which helped the Korea government to implement the swift quarantine measure. The diagnostic kit was applied to more than 150 countries, contributing to effort to overcome COVID-19 worldwide. In Korea, venture capital, which look for innovative startup, has been making an active investment in startup despite the huge risk posed by COVID-19. Venture investment were rather slow until the first half of this year, but by then increased by 6% year-over-year, marking the successful rebound. As such, innovative startup and venture capital serve as a strong supporter of the Korean economy. We are now witnessing the huge wave of non-face-to-face and digitalization, and COVID-19 is accelerating the tide of the change to the greater size and speed. Over the past 8 months, we have already seen fundamental change in our lives. Non-face-to-face way of work, were used only supplementary in the past, but they have already become the integral part of our lives today, and it's very likely that they would soon replace the offline way of the work. The conversion to the online and the non-face-to-face triggered by COVID-19 will quickly accelerate the transformation into the digital economy. The Ministry of SME and Startup has the policy goal of great transition to the digital economy, Smart Korea, and is leading the transition to the digital economy in earnest. The first, innovative startup in non-face-to-face field whose growth potential are verified amid of a crisis of COVID-19 will be cultivated into next generation innovative company to lead Korea economies. Support will be provided to business startup and R&D by discovering the promising startup in non-face-to-face field, and the Smart Korea Fund will be raised to amount of $6 trillion won, which is equivalent to $550 million by 2025, in order to provide funds supporting the growth of a company. The fund will be invested into non-face-to-face fields such as AI, cloud, biohealthcare, and data platforms as well. Also through the collaboration with global companies such as Google, Amazon, and large Korean company, we strive to discover and foster promising startup in new industries, thus creating an ecosystem of startup and venture capital led by the private sectors. The innovation of existing manufacturing industries also accelerate in order to help create the advanced smart factory based on the 5G and AI. The development of a platform is underway, which supports the utilization of manufacturing data in smart factories. After the ASEAN and Korea Special Summit held in Busan last November, honest efforts have been made to promote cooperation in the field of startup and venture investment between Korea and ASEAN starting this year. In order to complete the ASEAN and startup policy roadmap, joint research on a business startup ecosystem began in June this year. The ASEAN-Korea Startup Week in June and the hackathon in October also took place with various programs such as business model contest and IR sessions. The business matching program between large and mid-sized company and startup connected the large company of Singapore with Korea startup and mid-sized Korean company with Vietnam startups. In addition to those programs to support the startup of Korea and ASEAN, the Korean government is also supporting investment in startup in Korea and ASEAN by investing in venture fund managed by venture capital in ASEAN, such as in Singapore. In particular, the ADB venture fund worth 60 million was raised in collaboration with the Asian Development Bank in June, or with Korea government also. With the ADB venture fund, we are supporting the growth of a startup in field of clean technology, fintechs, agriculture, and healthcare also. We will make honest effort to consolidate bilateral cooperation on startup by conducting various programs also in 2021, such as the business matching program between large company and startup, accelerating program, and contest as well. I would like to ask for active participation from all ASEAN VC and startup partners. A new economy order will unfold after COVID-19, and the solidarity and cooperation among global startup and member of the venture ecosystem will become even more important. Take the development of a vaccine and treatment of COVID-19, and thanks for the collective effort made across the world, we are gradually getting at cruise to this pandemic. which export expected it would be year of get there. The Global VC Conference will serve as a venue for venture capital of Korea and ASEAN to exchange and cooperate. I hope the Global VC Conference will give us meaningful opportunity where venture capital of Korea and ASEAN can share the insight into the future, further and future after COVID-19, and turn the crisis into a very important opportunity. Thank you for all of you, and enjoy this conference and get a very meaningful insight as well. Thank you.
Thank you very much, Mr. Cha. Of course, that was Mr. Jong-Hoon Cha speaking to us live from Korea. From Korea, we move back to our studio here in Singapore, where up next we welcome Mr. Fabian Tan, who is Regional Group Director of Enterprise Singapore, and he'll be delivering to us his welcome address on behalf of ASEAN member states. Mr. Tan, please.
Thank you. Good morning, ladies and gentlemen. Thank you very much for joining us today at the ASEAN-Korea Global Venture Capital Conference. First and foremost, I'd like to thank the KVIC as well as the Ministry of SMEs and Startups for partnering with ASEAN on this inaugural event, the ASEAN-Korea Venture Capital Conference. I think it's a very good start to have this event because it will help to build more bridges between ASEAN as an economic bloc with Korea as the fourth largest economy in ASEAN. As a Singaporean who has lived in Korea for about more than 10% of my life, I would say that Korea is indeed a very dynamic country with so much growth potential. I've seen how digitalization has transformed many different sectors, from payments to infrastructure, all the way to e-commerce. And I've been a beneficiary during my time in Korea. And I believe that there's so much ideas that we can get from the Korean community to really transform sectors in Singapore as well as in ASEAN economies. Allow me to share a few ways in which I think Singapore, Korea, and ASEAN can actually build innovation bridges. I'd like to propose three main types of innovation bridges. First and foremost, I would like to propose to have landing pads in Singapore, in Korea, and also the major cities in ASEAN, where startups can actually find an easy way to gain access into new markets, and we can collaborate with each other to help the startups smoothen their entries into the markets. I would applaud the Korean government in terms of the setup of the Korean Startup Cooperation Center in Singapore earlier this year, and I think that this would actually help in many of the Korean startups coming into Singapore to navigate the Singaporean market, and after that in the ASEAN regions as well. And similarly in Singapore, we're working very hard with our Korean partners to find some of these potential receptacles for landing pads for our Singapore startups and ASEAN startups going into Korea market. The second form of bridge that I would like to propose is actually co-innovation between large corporates and also the startups. Korean conglomerates have had a very important role in the Korean economy and also played a very big role in many sectors in the global economy, from semiconductors to automotive to digital. And I believe that there will be many different problem statements and many needs of these Korean conglomerates that they can bring to ASEAN, where we can bring and involve our startups to co-solution under an open innovation model and subsequently help to source some of these great ideas that can power and propel the growth of the conglomerates. Last but not least, I would like to propose the third kind of bridge in terms of VCs collaboration. So VCs in Korea, VCs in Singapore and ASEAN region to collaborate in investing in the top startups, in the high growth startups for the region. And I believe that putting Korean capital together with Singapore capital, with ASEAN capital, I think we can make a difference. Last but not least, I would just like to make a reference to the theme of this conference, which is about knowing and cooperating with each other, Korea and ASEAN, and overcoming COVID-19. As Deputy Minister has mentioned earlier, COVID-19 has indeed caused a big change in our life in many, many ways. The way we work, the way we live, the way we consume. And I believe that there are many solutions that will be important for us to live the new life in the post-COVID world. And I do believe that there's great potential in this respect for ASEAN and Korea to collaborate. Our startups, our VCs, our accelerators to collaborate to create a better future. Thank you very much. 감사합니다.
Thank you very much, Mr. Tan, for joining us today in our Singapore studio. Mr. Fabian Tan speaking there. Once again, if you're just joining us, welcome to the ASEAN-Korea Global VC Conference. We still have a lot coming your way. We're expecting 15 startups to deliver their pitches in the course of today. Plus, we've got a couple of panel discussions and a lecture, which I'm sure we will find very, very useful. We're still getting through our keynote addresses. And up next, we are going to invite Mr. Kim Jung-hyun, who's the Managing Director of KIP Southeast Asia. Now, he'll be delivering his keynote address. And what's interesting about it is Mr. Kim will be sharing with us his knowledge on the brief introduction of the Korean startup ecosystem. He's here in our Singapore studio as well. Mr. Kim, it's over to you.
Thank you. Hello, everyone. I'm very glad to talk about Korean venture capital and startup ecosystem today. My name is Jung-hyun Kim from Korea Investment Partners. We call our company KIP as an abbreviation. I'm in charge of KIP Singapore office as a managing director. Before starting my speech, I would like to introduce you to KIP and my background. KIP is a subsidiary of Korea Investment Holdings, which is a listed company as well as one of the top financial group in Korea. KIP is a leading venture capital and private equity firm with ample investment experience. For more than 30 years, since 1986, we have shown steady and unprecedented investment performances in various industries. KIP is currently managing a total of 46 funds with the asset under management of $3 billion US. With the expertise in fund management, we have sustaining full IRR of 16%. Our investment range is wide, from the early to the pre-IPO stage, including private equity investment, but we are trying to pursue investment opportunities in Series A or B in the growth stage to make a balance between investment return and risk. Before I was dispatched to Singapore, I was in charge of fintech investment team in HQ. During the past 5 years, I invested in about $80 million US in 24 domestic and overseas startups. Out of my portfolio companies, some have grown into leading companies in every fintech sectors, such as P2P lending, crowdfunding, robo-advisor, blockchain, and insurtech. Then let's move on to Korean startup ecosystem. In 2011, the Korean government developed the Pangyo Techno Valley Industrial Complex near Seoul to maximize the growth potential of high technology startups. The success of this initiative convinced the government to actively support domestic and international startups, particularly in the field of information technology, Internet of Things, virtual reality, fintech, artificial intelligence, and blockchain. Government programs and funding are cultivating startups to be the new engines of economic growth, as well as embracing opportunities from the fourth industrial revolution. Thanks to these government initiatives, the number of startups in Korea has rapidly increased from 65,000 in 2011 to 98,000 in 2017. The Korean government has provided $3 billion to startups since 2015. This is the highest government backing per capita for startups in the world, according to Forbes. Additionally, $9 billion innovation fund to finance promising startups was rolled out in September 2018 by the Ministry of SMEs and Startups and the Financial Service Commission. As Korea is striving to embrace opportunities of the digital economy, it has become an attractive destination for foreign startups. There are well-known Korean unicorns that have achieved multi-billion-dollar valuations over the last 5 years, including Kakao, Coupang, and Naver. And Korea's tech startups such as Neoplay, Line, Next, and NCSoft have become global players in the IT and gaming industries. Korea was ranked the first in the Bloomberg Global Innovation Index in 2019. Google opened the first ever Asian Google campus in Seoul, leading global investors actively investing in Korean startups like BlackRock, SoftBank, Goldman Sachs, the Sequoia Capital, Formation Group, Rakuten, Tencent, and PayPal. Major Korean companies such as Samsung, LG, Lotte, Hana, and SK are pursuing collaboration with the startups through their own startup accelerators and incubators. As a result, the Korean startup ecosystem is developing these days. As of 2018, Seoul and neighboring Gyeonggi province were home to 467 organizations, including accelerators, venture capital funds, and government institutions. The list is a snapshot of the major players, including accelerators, co-working spaces, and venture capital firms. There are dozens of accelerator programs that create and support hundreds of startups. The Korean accelerators provide co-working spaces, mentorship for product development, and support. They develop new programs every few months, and their participation has become an essential path for most startups. Accelerators conduct recruiting programs every 3 to 6 months, and international startups registered in Korea can apply to all these programs. Why are Korean startup ecosystem thriving and international startups coming to Korea? Korea has the world's fastest internet speed, with an internet penetration rate of 93%. And Korea ranks consistently within the top 4 countries with the fastest mobile internet and has the most widespread 4G network coverage. And 5G was launched in December 2018, and the nationwide rollout was completed by the end of 2019. This infrastructure will give easy access to Korean commercial market and consumers to domestic and international startups. Korea's strong purchasing power has made the country a major test bed for some of the world's most successful brands. Geographically, in the center of Asia, Korea is considered a springboard to Northeast Asia with access to 2 billion potential high-tech consumers. The Pangyo Techno Valley offers tax breaks, low-interest loans, and large co-working spaces to international startups. There are many fast-growing industry sectors, such as food tech, digital health, ad tech, virtual reality, and fintech. Out of them, I would like to introduce fintech industry in detail. Korean fintech is rising fast due to the highest levels of smartphone penetration and fastest mobile broadband services in the world. fintech growth to date has been concentrated in digital payments and remittance. We can classify Korean fintech industry into 9 categories. Major services in payment sectors are Kakao Pay, Naver Pay, and Payco. Kakao Collect and Naver Link are major blockchain protocols. There are business finance applications such as Wihago, Gyeongninara, and Jarvis. Fount, Blio, Quarterback are the major robo-advisors. There are business finance P2P lending sector is very hot in Korea. Together Funding, Terra Funding, People Fund are the leading players in P2P lending sector. What is the top crowdfunding platform? And Korean crypto exchanges are well known for high transaction volume and variety of traded coin and tokens. Corbit, Bitsum, Upbit are the major players. Although InsurTech is in the early stage in Korea, GroupIsh, Bodak, and Bomap are trying to penetrating into existing insurance market. Korean government revised the Personal Data Protection Act this year to allow My Data service, so it is in the early stage as well. There are many startups in My Data sector these days. Fintech investment amount surged in 2015 after initiation of the government deregulation. The amount in 2018 was 198 million US dollars. It was more than 10 times higher than that of 2015. Due to the increase in the amount of investment, the amount of investment per deal also increased significantly. In 2018, the average value for deal was 11.6 million US dollars, and median value for deal was 5.3 million US dollars. This increase proves the size of the Korean fintech startup since 2018. As I said, payment and P2P lending take the largest share by fintech industry classification. Daily transaction of simple payments was 217.7 billion won, which is about 200 million US dollars. The top players in the payment sector, Naver Pay and Kakao Pay, take 30% and 16% market shares respectively. What is more interesting point in Korean fintech market is the growth of internet banks. There are just 2 internet banks in Korea, Kakao Bank and K-Bank at this point. When the Korean government first approved an internet bank, many experts were very skeptical of their success because Korea is one of the countries with well-developed banking infrastructure. However, Kakao Bank proved with a remarkable performance that the internet bank business model could be successful in Korea. As you can see, the number of customers and total assets grew significantly. It secured over 10 million users in 2 years, and total assets came to 22.37 trillion won as of 2019. Kakao Bank reached the break-even point after 3 years of establishment. And Kakao Bank is about to do IPO 5 years after its establishment. Demonstrating further support, the Financial Service Commission introduced new regulations to assist fintech industry. These will be implemented through the introduction of new technologies in payments, blockchain, and more areas. It will promise to benefit consumers and improve the available service offerings while creating employment opportunities at the same time. On top of these initiatives, Korea is an ideal market for consumer testing, with almost half of the country's population in tech savvy. Koreans are early adopters of new technologies, making the country a perfect test bed for the North Asia market. Fintech deregulation is key to Korea's national agenda in 2019 and will be heavily supported by an unprecedented set of initiatives throughout the year. The regulatory sandbox allows companies to try out new technologies without excessive regulations for some period of time. This exemption is applied for 2 years, providing the startup services are classified by the Financial Service Commission as innovative. These regulatory sandboxes for fintech companies that use new technologies like blockchain, machine learning, and big data will be exempted from existing regulations. This will lead to innovation in the fintech space and create promising fintech startups in the future. Lastly, the open banking initiative cut the cost of payment processing fees within the first half of 2019. Additionally, the government initiated the My Data program using the concept of open banking to accelerate innovation. In the second part, I will introduce you Korean venture capital space. There are two sources of funding for startups in Korea: government funding and private venture capital funding. The Korean government started providing funds for startups in 2013, commencing with a $50 million fund, which was increases to $1.3 billion in 2015. This commitment demonstrates that Korea has a large and diverse range of investors, Korean-based funds, corporate venture capitalists, and international venture capitalist firms. Since its foundation in 2005, the Korea Venture Investment Corporation, KVIC, has supported innovative SMEs by operating the Korea Fund of Funds. The KVIC manages several Korean fund of fund and matching fund, including angel investment, venture M&A, industrial technology commercialization, and foreign venture capital investment matching fund. The Korean fund of fund has reached $4.1 billion at this moment. There are corporate venture capital and private venture capital in Korea. Korea's largest conglomerates such as Samsung and Hyundai pioneered in-house global venture capital units. Samsung Next, the venture capital investment fund of Samsung Electronics, has a set of offices in 5 strategic locations: Seoul, Berlin, Tel Aviv, Silicon Valley, and New York, in the past 5 years to invest in early-stage software and service startups. The investment focus is on 3 areas: connected vehicles, AI, and blockchain. Since its start in 2013, it has pursued strategic investment opportunities beyond their regional hubs to bring their product and services to Samsung consumer worldwide. The Hyundai Motor Company has established an international corporate venture capital unit, which is called Hyundai Cradle, with regional offices in 4 selected markets: Israel, US, Germany, and Korea. It focuses on the 5 areas of mobility, smart cities, energy, robotics, and AI. For international startups, it provides an opportunity to not only capital, but also the access to the parent company and their diverse portfolio of consumers and industries. We have many private and foreign venture capital in Korea. SoftBank Ventures, which was established in 2000, is a subsidiary of SoftBank Korea. It primarily invests in early to growth stage startups with the potential to expand into Asia. Atos Ventures is a first-stage venture capital firm based in Silicon Valley with 16 years experience in Korea. In 2016, the firm raised $100 million to invest exclusively in Korea. Qualcomm Ventures is a corporate investment arm for Qualcomm, with the investment in more than 120 portfolio companies worldwide. In 2016, it created $50 million US fund to nurture Korean startups in the field of 5G, IoT, automobiles, and other mobile services. So far, I have been talking about Korean venture capital and startup ecosystem. Through this webinar, I hope KIP to be connected with you in future. Thank you very much.
Thank you very much, Mr. Kim, for taking the time this morning to speak with us. We just heard from Mr. Kim Jong-hyun here in our Singapore office. It is the ASEAN-Korea Global VC Conference, and up next, we would like to welcome Mr. Vinnie Lauria. Now, he's the founding partner of Golden Gate Ventures, and he'll be making another keynote speech. What he's going to do is give us a glimpse of the startup scene here in Southeast Asia. So from Korea, we expand out to Southeast Asia. Mr. Lauria, please.
Thank you very much, and thank you to KVIC for inviting me. I'm going to launch the presentation here. Okay, cool. My name is Vinnie Lauria. Part of Golden Gate Ventures. Yes, there it goes. So just a brief history of us. Venture capital firm. Next year is going to be our 10th anniversary. So I've been in the region for a decade. I've been investing many different verticals, have learned a lot, and that's what I'd like to share here today. I try to do a really good cross-section of interesting activity. I'm sure some names you're familiar with, and I'll share my own perspective on them. So it's not really just our portfolio, but it's all the activity here in Southeast Asia. And what I think is kind of helpful to know is, so I'm American, here in the region. And for me, it is a really exciting time. I was very bullish on Southeast Asia 10 years ago, and I continue to be today. Because of COVID, I still think there's a great future. So I want to talk about what makes Southeast Asia unique. Let me just split my screen here with the slides to go forward to make it easier. Okay. So we have a very, very diverse population. You know, as an American, you might think Southeast Asia, one country or something along those natures, but the reality is it's many different countries, and per country, there's many different ethnicities, languages, and different styles of culture. And that's really important to really understand that. So hundreds of ethnic groups, but it's expected to contribute almost 10% to global growth over the next decade. That's what makes this region very, very exciting to me. And the other huge thing that's happening here is it's like China 15 years ago. You have this emergence of a middle class. You have people moving from rural into cities, people going from uneducated to being educated. And so that's where a lot of the growth is, and that's what we're investing in. And I think that's where a lot of opportunity exists. Just to give comparison of these different networks, you have Philippines versus Indonesia. If you've been to either, you're familiar with the amount of traffic. Singapore compared to country that's Vietnam. It's very stark difference in terms of infrastructure, transportation, and then services that are being built. And this is some of the challenges for a Gojek going regional, a Lazada going regional, and I'll talk a little bit about some of the successful strategies they're using. Malaysia, Thailand. So who are some of these new titans? Who are some of these bigger companies? I actually, the word new, for some it is recent, but for a lot they've been around for almost a decade as well. So they're brand names that people should recognize. This is just a cross section of some of the biggest companies. And again, I didn't want to focus on just our investments. There's a few there, but the vast majority of this are just the big players in Southeast Asia. And I try to break it out by who's kind of identifying some different verticals. And what's interesting here is for these companies, some of the verticals you might look at, logistics, e-commerce, you could kind of, that's almost boring, the older sort of school stuff, but that's what's really exciting. And there are very, very new methods that are being formed here. Carousel with classifieds being mobile was completely different than the eBay and Craigslist model, which led then to different behaviors, different interactions, in-person meetup, bidding, people selling through social streams. So Southeast Asia, because it's mobile first, allows people to really innovate on these business models that have existed in other parts of the world for 2 decades, but are being reinvented in this part of the world. And then we find them being copied in the carousel example, by OfferUp in Europe. And so these Western counterparts are now copying what's happening in Southeast Asia. Gojek would be another great example of Western companies looking to, how is this different? This isn't Uber, this isn't DD, this is something very, very different that evolved in Indonesia. And so Gojek started out not even as an app, but it was basically a call center and a Twitter account where you could basically ping to hire a motorcycle taxi. And then from there, Nadeem built it into an app and then built it into a multi-billion-dollar company that now does obviously ride hailing, but delivery, food delivery, entertainment, services, payments. GoPay just spun out, being backed by PayPal, Google, and a number of very, very large US companies that realize GoPay is going to dominate in Indonesia. If anybody has any questions, I'm not sure of the format, if it can be put through chat, happy to answer. But Gojek is fundamentally different than Grab, and that's why I wanted to show this one as an example. Grab started as ride hailing and did go into these other services, but it was almost an afterthought. We are small investors in Gojek and only came in later, but I did meet Nadeem early on, and to hear him before the app was even built talk about the payments infrastructure and allowing a delivery driver to go into a restaurant and order food. They're not going to have enough payments, so he's going to have to allow the customer and the merchant to kind of connect outside of the driver. He was thinking of all this stuff before the app was even built, and that is where Gojek has been this really amazing product. What Grab has, which is also very amazing, and there's rumors now of them talking about merging. What Grab has is incredibly good DNA to go regional. Grab started in Malaysia, then was in Singapore, Philippines, Thailand, Vietnam, Indonesia. They're across the region, and they've done that really, really well. Gojek has stumbled as it's tried to go regional. They went to go open up in the Philippines. They got shut down by regulators in day one. Grab, using local partners and JVs, was able to navigate those waters. And so 2 different types of companies that have made a lot of value going about it very different ways. And that's why they're talking about a JV, a merger. I don't think there's one clear answer. Are you a product company first? Or are you a regional company first? Both have their value. The next company, public company, so this is SEA Group, started off as Garena, a gaming company. Again, a brand that people should be familiar with. What's really interesting is there's predominantly 2 drivers here. So there's their gaming business, which is incredibly profitable and has been licensing games from Tencent and reselling them locally in Southeast Asia, and that's been generating a lot of cash. But Shopee has been a marketplace, e-commerce marketplace, that has been really come from behind to take top positions in markets, Singapore, Indonesia. Now, it might not be number 1 in some of these markets, but it was definitely the 3rd, the 4th player compared to a Tokopedia, compared to a Lazada. All of a sudden, I shouldn't say all of a sudden, they worked very, very hard. It's really come ahead. Part of their strategy to get ahead was to subsidize their growth. So in Indonesia, they made it free to ship things. They would sometimes even credit back the seller if they had to pay for shipping. People were abusing the system. They were just, I'm going to send something to my brother. I'll then bill it, and then I'll get, make $4 by saying I shipped it. I didn't, and he'll say accepted it. So people were doing that. Shopee, this wasn't, public news, they didn't mind. That was subsidizing growth. It was transaction volume, even though it was kind of phantom, but they were able to switch that on to legitimate sort of transaction volume. So by raising more capital, doing these sort of campaigns, doing these integrations, they've really put themselves ahead. And now they've have, soccer players that promote Shopee, and that actually works really well in Southeast Asia, having those sort of promotions. Job Street. So This is a job portal. Again, kind of old school technology. I'm sure there's a number of companies that have been doing this in Korea for about 2 decades, but they are a very, very big company, over $500 million in funding to date. They exist with different titles and different properties across Southeast Asia. They are a great example of a company that understands how to go regional. Again, it's not just having a different language. Sometimes there needs to be a different product name. Sometimes there needs to be different offerings, different partners, different business models in each country. This is a deep tech company, started in Singapore and then has gone pretty global. And so I also want to just highlight here in Southeast Asia that it's not only just the consumer facing apps, but here this is for tracking and using QR codes to get the prices of items, find more information of items, or add it to a shopping cart using augmented reality. Entertainment is also big. So Bigo Live, it's had a very interesting journey. Taiwanese company and a Singapore company came together a few years ago to really dominate N17 and Parlor. And so they together have now made a massive entertainment live streaming similar to some of the biggest platforms in China. They were rumored, or they were supposed to go public in New York. They ended up pulling that very last minute, but they've made a really, really strong live streaming business here in Southeast Asia that's really actively used. And what's interesting is there's opportunity for companies like this to build it in Southeast Asia, because some of the folks from China, some of the folks in the US, well, the US, it just doesn't, on this side, doesn't really dominate. In China, there is, but this is where the Chinese playbook for coming into Southeast Asia generally has been, rather than pushing and advertising on your own, like we don't see Alibaba pushing, their own products, Alipay or Tencent pushing really hard with WeChat. I mean, they do try to make some inroads there, but what they do is they invest behind some of the companies like this, behind some commerce companies, behind some payments companies, in order to have that footprint in Southeast Asia. Tiki, e-commerce site in Vietnam. So the really big, and one of the themes here is that you'll see is a lot of these companies tend to operate in one of 3 markets: Singapore, Indonesia, or Vietnam. And so even though Southeast Asia is a dozen countries, we focus on about a handful of those. So the 3 I just mentioned, plus Malaysia, Thailand, and the Philippines. But in terms of massive amounts of funding, massive amounts of growth and opportunity, these are the markets that tend to take the most sort of attention. So it's really important, if you are investing in Southeast Asia, to have a footprint in these markets. We have 2 offices, Singapore and Indonesia. We'll be opening up a Vietnamese office soon. We just did a huge event there with the government. It's a really, really important market. Traveloka. So obviously hit by COVID, the travel industry, but before COVID was on a tear. During COVID, they made really hard layoffs early on. To their credit, that is the direction some CEOs need to take in an industry like this. They've successfully raised a pretty healthy amount of funding just recently. They are going to outlast the pandemic, because they have enough capital and enough runway. And when travel does come back online, maybe it's a year away, maybe it's even longer, 2 to 3 years, they're going to be in a phenomenal position to ride that growth once again. So this is, even if, there's opportunity to secondary or a down round, even though it's in the travel space, we're not investors. I do think Traveloka would be a great investment, because they were dominating pre-COVID and they're going to dominate again. When I first heard it, so yeah, this is an opportunity that they never formally pitched to us, but like when I first came across Traveloka in the region, I asked myself, like, how would they compete against an Expedia, a Booking.com, and Agoda? Because these companies advertise globally, travel is global, business, vacation, people going to Bali. How are you going to compete with that? And it took me a few years to realize it's because Traveloka is localized. They're not going for the global audience, they're going for the local audience. They're going for Indonesians who travel for business and for vacation, Thais who travel for business and vacation. They tend to stay in 2-star hotels or budget accommodations, and it's a very different sort of travel style. The Expedias of the world don't have those on the platform. Most of these budget accommodations don't even have software to integrate with Expedia and Booking.com. So it requires WhatsApp and phone calls and agents and people. So this is where Traveloka really dominated. And so the name of the game here is around localization. It's not just localizing for the language, but it's for how the business actually works and the services you provide. And that's why Expedia wrote a really big check into them 2 years ago, and then again this year, because Expedia knows they need a local partner for that sort of exposure. So what I did here was just, again, I didn't want to go through every company. So the ones that are grayed out, I have talked about. So I mentioned Grab. A few other things I will kind of highlight. So Send It, which is a portfolio company, they are in the payment space. They've built a phenomenal business in Indonesia, and now they're expanding into other markets, just being something similar to Stripe, where it's just an API that e-commerce companies can use to collect payments. The biggest pain point has been for the past decade, and still continues to be, how do people pay for anything digitally? Everybody has cash. It's a very cash-oriented economy, especially for the bottom of the pyramid. They don't have bank accounts. They don't have a Visa or MasterCard logo in their wallet. So how do they pay for things online? And this is where services like Send It become really important. They allow bank transfers, they allow top-ups. You can go to a 7-Eleven, or you can pay with a credit card. And for a merchant, it's all API oriented. Another one I'll mention, Wrong Guru, just because education tech. This has been, we're not an investor, this has been their year because of COVID. There's been a lot of remote learning. Wrong Guru has really stepped up. They've had great relationships with the government, which is very, very important here in Asia. And they've become kind of the de facto platform, the standard platform that a lot of schools are using in Indonesia. So this is where COVID has had, devastating effects, and especially in the US, globally. But for some verticals, startups have actually really leaned in. Education, health tech, commerce, logistics, these have all been growing. A number of our companies in these spaces have raised this year. As a VC, it's our goal to, predict the future, 5 to 10 years out. And I would say that basically what COVID's done this past now 10 months is basically, 10 months they've accelerated what the behaviors would have been over the next 5 to 10 years. They compressed that down into less than a year. So it's very, very interesting to see how some of these behaviors have evolved over the past year. And I think they will stick, post-COVID. So I have a few minutes left. So this next decade is Southeast Asia's decade. I'm very, very bullish on that, like I was 10 years ago. Basically, the growth, GDP growth, again, people moving from rural to urban, manufacturing because of US-China trade tensions, moving into places like Vietnam. Samsung, Korean company, now makes half their phones in Vietnam. They've done this shift over the past few years. A lot of companies are making that shift. So Vietnam is rising very quickly. Chinese companies trying to be more neutral are picking Singapore as this is where we want to be. And to me, Singapore is both a hub for Southeast Asia, but it's also a global, it's an international hub. Davos, the World Economic Forum, which has been in Davos for decades, presidents, prime ministers, they fly in there. Singapore is hosting that next year. They've never made a switch like that. So Singapore is this international city, but it's key in Southeast Asia. And it's this symbiotic relationship. It doesn't have a very big market, but Indonesia does and Vietnam does. But Singapore is a place that has governance and safety of business, and it's a platform for investment. And so they work very well together. And then finally, just around the growth in Southeast Asia, what is kind of predicted and where it's been coming. Might be a little bit hard to read some of those numbers, but I will, so Southeast Asia in terms of the emerging markets as a growth predicted for 2021 for next year is some of the highest in the world. And this is from the World Economic Forum. So Southeast Asia is supposed to have the highest economic growth of any region globally. So good place to put money. I would always say that even 10 years ago, China is always going to be bigger, even India, bigger from an economic standpoint. But the delta, the year-over-year change, and that's what we as a VC look to invest in, is that growth is massively huge and is an exciting opportunity here. And so with that, I would like to thank everybody. Appreciate everyone's time and this opportunity to talk about the region. Thank you to David.
Thank you very much, Mr. Lauria, for speaking to us this morning. Of course, that was Mr. Vinnie Lauria, who was talking about the startup scene in Southeast Asia. All right, so that time in the morning, we're done with all the keynote addresses, a lot for us to process. So we're going to take a short break to sort of let that sink in before we return with our first panel discussion of the day. That should be quite an interesting one. Ladies and gentlemen, the ASEAN-Korea Global VC Conference returns at 10:10 a.m. Singapore time. I'll speak to you then. Good morning from Singapore and welcome back to the ASEAN-Korea Global VC Conference. It's time now for our first panel discussion, and it's going to be quite an interesting one. We've got great speakers from the Korean venture capital space, and they are going to share their personal experience on adapting to a new world. Of course, you know, you've heard this word. This is the new normal. You've heard it several times this year because we are facing an unprecedented pandemic. So I want to start the session with a brief introduction of our speakers. We've got JP Lee from SoftBank Ventures Asia, Sang-Ho Park from Korea Investment Partners, as well as MS Kim from Korea Venture Investment Corp. Gentlemen, thank you so much for taking the time to join us this morning for this discussion. I suppose let's get into it a little bit deeper. Let's get to know you guys a little bit better, as well as the companies that you're representing this morning. Could we start off with JP, please?
Hello, how do you do? It's a pleasure to meet everyone, and it's an honor to be part of this session today. My name is JP Lee. I'm a CEO and managing partner of SoftBank Ventures Asia. We are the early stage venture arm of SoftBank Group with an asset of about $1.2 billion under management. And we're focusing on Asia, which means we invest in Korea, China, Southeast Asia, Japan, and with some opportunistic investments in Israel and the US. It's a pleasure to join you guys all.
Interesting areas that you're covering there. Sang-Ho, tell us a little bit about yourself and the company that you're representing.
Sure, thank you. Good morning there. Well, thank you for having me today. Well, I'm Sang-Ho Park from Korea Investment Partners. Well, you just can call us KIP or KEEP. So previously, I worked for NHN, aligned to gaming division, and also consulting from Accenture before. Well, KIP is one of the largest venture capital house in South Korea. So we are managing more than $3 billion as our AUM. Actually, we are very industry agnostic investors and also covering quite many overseas market as well, including definitely Southeast Asia and also Europe and US and other region as well. So yeah, we also very actively invest in Southeast Asian market these days. So we are backing successfully the companies like the Tiki, Halodoc, or ATTN, or Apota. So thanks for having me today.
Thanks very much. And finally, we have MS. Could you tell us a little bit about yourself?
Well, first of all, it's my great honor to join this fireside chat as a representative from Korea Venture Investment Corporation. KBIG is a state-backed government agency of Korea. Our main role is to provide stable capital to private venture capital market and a proposal of boosting Korean startup ecosystem. Currently, I'm in charge of global investment team of KBIG. Thank you so much.
Gentlemen, thank you very much again for taking the time. And this morning, we're going to be talking about COVID-19 and, of course, the Korean startup scene. And, you know, it's no secret. It's been a very hard year. We keep talking about this over and over again. I know you guys have a lot of experience to share with us about the impact of COVID-19. We've got about 35 minutes to get through this panel discussion. But I really would like to start off with you, MS, simply because you work closely with the Korean government. So could you tell us a little bit about the pandemic's impact on the Korean society and, of course, the government's response to it? We've heard a lot of good things, especially at the height of the pandemic, where there were things like drive-through testing and how that was key in Korea, getting a handle of things. Could you share more on your perspective?
Well, yes, that driving through was, amazing. Yeah. Korea was one of the first countries to be hit by COVID-19. We witnessed its explosion in the number of confirmed cases in late February and early September. But we were able to flatten this curve. And nowadays, we are witnessing the confirmed cases of Korea over 600 per day. And Korea government is doing its best to prevent the spread of confirmed cases. Guided by our past experience with infectious diseases such as MERS and SARS, we have firmly adhered to the principles of openness, transparency, and civic engagement from the very beginning of the outbreak. Definitely, COVID-19 adversely affected venture capital industry of Korea as well. So as of September 30th, 2020, venture investment amount of Korea was Korean 2.8 trillion won, which was a reduced number by 8.7% compared to 2019. However, if we narrow down to third quarter statistics, 2020 third quarter venture capital investment amount recorded 1.2 trillion Korean won, which was increased figure by 6% compared to 2019 third quarter. So this rebounding trend is even more clear when it comes to the fund formation amount. So in 2020 third quarter, 1.5 trillion Korean won of venture capital fund is formed, which is 31% greater than that of 2019 third quarter. Behind this rebounding trend, there is strong willingness of Korean government. Korean government announced that Korea would nurture promising startups under untapped and bio, healthcare, and green industries by forming 6 trillion Korean won of Smart Korea Fund. In addition, Korea government has plans to nurture 1,000 promising untapped startups to support R&D expenses of cutting-edge technology like AI, next generation semiconductor. So, and they will support digital formation of manufacturing industry of Korea as well. Yeah, thank you.
Thanks a lot, MS. And that brings me to our next speaker, Sang Ho, because you're working for one of the most prominent venture capital firms in Korea, and even though we're in the middle of a pandemic, I've noticed that the startup scene, the startup ecosystem, is still booming. People are still looking to start up businesses. I do want to ask you what you think is the most significant difference, pre and post COVID-19, where the startup ecosystem is concerned. And do you think that maybe because Korea was one of the first in the world, in fact, to launch 5G, do you think that helped Korea cope with this pandemic, especially with contact tracing and whatnot? Your thoughts, please.
Yeah, surely, many of the startups here has been freezing their budget, or freezing their new hires, or pivoting their business somehow. Or actually, it's not that much most miserable things, because the most miserable thing doesn't come yet, but still we can say fine. But as you know, this pandemic is influenced kind of differently on different industries. Someone is screaming like happily, but someone is crying. Yeah, some industries actually really in bad situation these days, and it makes them shut down inevitably as well. So I can't say about the all ecosystem in every field because different impacts they have. But let's talk about some traditional contents like film and interactive contents like gaming or streaming. It is my expertise actually. The traditional contents like film and broadcasting, it has much lagged or even canceled to create a new contents. All the broadcasting companies are in bad shape. Actually, they used to be bad because the advertisers are struggling as well. Less advertisement and less sponsorship means, less content creation. This is not a good environment for creating a new content. It's like they are in the negative loop. That's why you can see, let's say, you can see same drama and same movie and same variety show, rerun endless whenever you watch the TV. But on the other hand, but talking about one of my expertise industry, interactive contents like gaming, actually, gaming companies is in front of the super good environment these days. But it doesn't say all the companies are better than before in this pandemic. Unfortunately, it's more like the rich gets richer and the poor get more poorer. So most of them who used to be in trouble before, unfortunately, they are still in trouble now. But one important thing I realize is that this pandemic gives a confidence to them. Yes, they say it's like yes, you can do that, and look at them. That even young guys are doing even better than us, and so next will be ours because the gaming platform is pretty highlighted these days. So as you know, actually the mobile gaming, especially the mobile gaming platform used to be getting saturated. actually recognized as saturated, but everybody thought like that, even till last year's. But so many gaming guys used to be frustrated and have no confidence before, but this pandemic paradoxically gives a positive change to them. For some reference, like in South Korea, very young companies like 111% and Supergym, they made a kind of the big crack in this big guy centric gaming industry in Korea. So I think this is one of the positive change for gaming ecosystem in South Korea in this pandemic.
I'm definitely gaming more as well. I have to be honest with you. But you bring up a very, very, very good point because it's unequal where each particular industry is dealing with this pandemic in this entire ecosystem. Which brings me to you, JP, because we've just heard a perspective from the Korean market. But if we were to zoom it out wider to the Southeast Asian market, what are some of the observations that you've made in terms of the startups ecosystem pre and post COVID-19?
Right. I think there hasn't been much of a difference in terms of how the startup ecosystem reacted to the current crisis. I mean, the changes I have witnessed in both countries, I mean, in Korea and Southeast Asia, were actually somewhat similar. Just like what Sanwo just mentioned earlier, people are spending more time on their phone, on their internet, watching content, playing games, spending more time on e-commerce, learning things from online education sites. However, one thing I wanted to point out was, whenever there's these social environmental changes that's caused by these crises like pandemic or war, there are always new opportunities for startups because the way people behave change dramatically. And we're at a point where the social behavior change needs the disruption and a rise of new technology, such as AI. As you know, even if there are new technologies, it's really hard to be adopted by the society because of its legacy. However, fortunately, unfortunately, these significant changes are giving opportunities to accept these new technologies, these new services. One good example that I noticed in Southeast Asia particularly is that there are now companies who are utilizing these rising new technologies to enter into a traditional market to make a big leap. SoftBank Vision Fund, which is our family company, recently invested in a company called Biopharmis, based in Singapore, and they created an AI technology that could help predict patients from having a heart attack 2 weeks in advance. And because of the crisis of COVID, all the hospitals were having trouble managing these critical patients at the hospital. So they had to actually discharge some of them and start monitoring them from the hospital. And this technology, which would have been very difficult for the hospitals or these traditional medical systems to adopt in a short period of time, because of the rising number of patients, they had no choice but to try to adopt it more aggressively. So this company over a year, number of volume that they provided to the hospital had rise, I would say, exponentially. So it's a good example, which I would love to talk about in the later question. That there are difficulties, just like what Simon mentioned. However, there are also huge opportunities for startup, because of the collision of this new technology rising and the social behavioral changes that's happening in the world today.
Yeah, I appreciate that, JP. And really, you're talking about people who are able to turn a crisis into opportunity. And if I were to stick with you for just a bit more, if we were to look at startups right now in this moment who are still struggling, in your opinion, what is the biggest challenge that they're facing? Is it as simple as the fact that they just can't digitalize? What are your thoughts?
So if you are asking this question specifically related to the COVID-19 crisis. I think the biggest difficulties some of the startups are facing today is financing. So there are startups who are finding these opportunities like Bioformis and growing, but there are also startups who are finding difficulties retaining their business, simply because people stop outdoor activities. One good example is a company that provides software to sports teams, like soccer teams, to help measure data online. Because there are times, I know the games are coming back, but for several months there were no games because all the governments in the world strictly prohibited these outdoor activities. So their revenue simply just were gone for time being, and the company happened to be at a phase of raising a new round of financing, and it was extremely difficult for the company to go after new investors to convince. Because no one knew when the world is going to come back to norm. So, a company like this, fortunately, internal investors stepped up and helped finance. However, there are a lot of companies who are facing these type of troubles, and up until now.
Yeah, Sang-ho, zooming into you and the Korean market, what are your thoughts on what some of the Korean startups, in terms of challenges, are they facing right now?
Well, actually, I'm kind of very same on what Jim Peel mentioned. Actually, let's say the VC is also a little bit freezing their investment. For some of the VC, they are increasing their investment amount of this year because we know what will be better future once we invest more in this pandemic, so we will get in the brighter future. But still, let's say, as far as I have witnessed in South Korean market for the VCs, well, many of VC, they are looking at the company who are profitable in this pandemic. So it means that some companies having some challenges, they are really challengeable to get the more finance. I mean, regardless of they are gaming or regardless of they are travel industry. So all of the startup companies having same problem if they are not profitable and if they are not kind of a brand new company. So investors, they are more and more to look at the companies like we already know, and we already know these companies already Series B and profitable. So it's like winner takes all market in this pandemic. So this actually is not just a problem only in South Korea, but it's really same to Europe and South Asian market as well.
MS, bearing in mind what the two gentlemen have just talked about, JP and Sang-ho, talking about the various challenges, financing and whatnot. I know you work closely with the Korean government, but just zooming out globally, and I want to get your opinion. I apologize if this put you on the spot a little bit. Do you think that government financing is always going to be the answer to these challenges? Do you have any thoughts on how these startups can overcome these challenges?
Well, I think that's a very good question. As both Sang-ho and JP mentioned, financing is very important under this severe COVID-19 situation. And yes, the financing from the government is not always the answer, but sometimes I think the government should do its own role. One of the examples is that since KBIC is single most biggest LP investor of Korea, we generated several ideas to help venture capitals and startups of Korea struggling to overcome the adversity from COVID-19. KBIC first tried to have early formation of venture capital funds. In the formation of venture capital funds, general partners typically need to get funding from other LPs in addition to KBIC's portion. These other LPs could be private LPs. So since we could expect some general partners would fail in fundraising due to the private institutional investors' conservative asset allocation stance at that time, KBIC allowed some GPs to form a venture capital fund earlier than expected with just small size. We believe this measure could boost early execution of venture capital investment activities so that startups could get investment at difficult times from even the private investors. In fund selection process, KBIC typically executes on-site due diligence and presentation session in front of commitment committee members. But after COVID-19 shock, we allowed online processes. So both due diligence and commitment committee could be held via virtual conference to like Zoom. And in addition, we skipped some unnecessary processes to expedite the investment under shrunken investment environment of VC industry. The KBIC has and the list of hundreds of promising startups, so-called K-Unicorn. So the example would be the Market Collie, the grocery delivery service, SoCar, car sharing service. Those are examples of K-Unicorn companies. So KBIC is now helping K-Unicorn companies who are not able to go abroad nowadays. We help them to attract investment from both domestic and overseas investors. We launched the online fundraising platform, and we had regular meetup events, and we have startups to make their own IR videos to facilitate their financing activities. Yeah.
Well, thank you very much. I appreciate you handling that question. Gentlemen, we are headed to the end of the year, and there seems to be some kind of optimism in the air. People are talking about 2021 as the year of hope. We hope. But you see in the UK how this week they are the first to roll out COVID-19 vaccines. The markets, the financial markets are reacting with a bit of cautious optimism. It's almost as if the market knows that, hey, this is going to take some time for it to really stabilize. So my next question is about future outlook, and I want to put out two scenarios. If you could help me answer these two scenarios. What is your outlook if A, the COVID-19 vaccine goes well, we are able to control the virus, or B, there are some complications and potentially more lockdowns in 2021? What is your outlook in those two scenarios? Could I start with you, Sang-ho?
Well, actually, I don't want to imagine the gloomy future, but let's talk about some brighter future. Well, you guys already know what kind of industry will be recovering and growing massively after COVID-19. But I don't want to say about the specific point of view about the industries, but obviously, I think cross-border investment will be massively increasing again in bright futures. What is different between these days current scene of VC and the past scene of VC? VCs has been getting more demands to invest in overseas markets so far, including SoftBank as well, KIP as well, and also I'm not only saying about the VC in South Korea, but also the VCs in other countries like US, Europe, and even Southeast Asian countries as well. The reason why this is not easy to invest in overseas market in this pandemic situation, as we all know, is we can't have kind of a face-to-face meeting with the startup companies we are looking at. I'm not on the private equity side, I'm a VC side. So the most of company I am looking at, they don't have any, not any, but they just rare revenue or no positive cash flow. So it's not number-driven investment decision. So investment is all about the team. Like some talking about the chemistry between me and them. The legal due diligence and kind of finance due diligence, it doesn't matter for us. Actually, it is fine. We can do that. Still, we do well, very well remotely, hiring some, the professionals. But, I can realize, without any face-to-face meeting, I can realize, who they are exactly, trust me, the personality is definitely most priority for us to make a decision. So after the pandemic, I strongly believe we will, more increasing the overseas investment, and yeah, then it's going to be more faster. And gloomy future, if this pandemic lasts longer than our expectation, well, definitely, we're going to be stuck in our home more and more like today, and we should keep our current strategy in the case. So let me talk about some KIP current strategy, because actually KIP has recognized this pandemic, like another chance for the VC. So actually we increased our investment amount in this year. Last year, as far as I remember, our total investment 2019 was $300 million, but this year we already reached out $400 million. It's more than 30% bigger than last year. So, like, the company who has, who are in front of the great situation in this pandemic. So yeah, that is just the reason we invest more and more, because they need to have more money to acquire competitors and their peer group, and then they will take a winner position. And for the poorer group, but still have some fundamental and kind of the core competency, but the pandemic makes them worse than before, but they still have some core competence. Yeah, we still has enough reason to invest more and more because they are familiar with KIP. But unfortunately, if this pandemic lasts longer than expectation, yeah, I think it is not easy for us to look at new investment cases, because I mean it is our duty to make our portfolio company surviving.
Thanks very much for that. JP, do you share that same optimism that's in the air right now? I mean, there was a pretty important point. At the end of the day, if things go bad, we will suffer where human-to-human dynamics are concerned, that sort of personality matching and whatnot. What are your thoughts, again, same question on the two scenarios? One, the vaccine goes well. Two, a little bit more complication, another lockdown perhaps.
So to be honest, I personally hope the vaccine will be effective immediately. However, I think the way people live are not going to really change. I think people are getting accustomed to this new norm, and so we are actually predicting the future based on this assumption that the way people behave, the new behavior that people adopt, are going to stay the same. So we also, in that sense, optimistic about new opportunities in the future as a venture capitalist. If I may echo what I highlighted earlier while I was answering your first question, I do believe, because of rise of new technology, more specifically speaking, AI, it's enabling a lot of new business opportunity across different industries. Starting from healthcare, automotive, finance, logistics, retail, energy, and so on. I can go on forever. And with the social behavioral changes caused by this unfortunate pandemic, is actually opening a door for a lot of new business opportunities for startup. And by meeting with this the rise of new tech such as AI, we think there's going to be huge disruption in online finance, online shopping. One area that we're interested in looking at further is remote working, remote hiring. I've seen a company who's building a tech using AI to help with the interview process. So, when you run an interview, you can actually see the candidate's face with the software, and they analyze your voice, your face, motions, gestures, and they tell you whether the person is telling the truth or confident, or what kind of character the person has. And I found it very interesting. The product is still at its infant stage, but I can see how the remote hiring is going to change, with this new technology. And also, as I mentioned, remote medication, education are also areas that we're seeing a huge leap. Just like the case of biopharmacy that I introduced earlier. And also, we're seeing a lot of changes in restaurants, delivery, kitchens. SoftBank Ventures Asia actually has invested in a company called Yani Corp in Indonesia, which is a cloud kitchen service company that's getting really popular. And COVID-19 is giving huge opportunities for these kind of companies to grow. And also, we're seeing a lot of changes in lifestyle, right? We have invested in a company called Laundrigo, which is a laundry like on-demand service company. They built their own factory where most of the process is automated using AI and robot to basically get all the laundry done overnight and get it delivered to your door. And that's kind of a new service that's rising because of these new social behavioral changes happened by COVID-19. So my point is the people, the way they live, the lifestyle that we're all having today, are not really going to change. That's how we see it. Even if vaccines out there and people at least in terms of the number of test cases slows down, and we still believe people will find the way they're using these new technology and products are more comfortable and convenient and more effective, and there'll be less reasons for them to go back, right? And I think because also the fear that the people would experience this year will also I think make it very difficult for them to go back to what it used to be in the past, before COVID-19 crisis.
Yeah. Would you say, I mean, just to emphasize on your thoughts a little bit, that this entire experience has forced us as a human race to finally accept that we have to work alongside technology? And I say that because at the start of Industry 4.0, everyone was just afraid that we're going to lose our jobs to the machines. But really, this has shown us that, hey, we got to work alongside. We just need to sort of re-switch our mindset a little bit.
Yes. I mean, if you think about it, when machines first came out in the 18th century during the Industrial Revolution, people were scared. When the cars, came to the world, for the first time in the early 1900s, people thought these technologies were evil. But over time, people, adopted it, and that had become a new norm. And I think that's the same for now, which is, if you look at the book that's written by Charles Dickens from the 18th century, the way students learn from their teacher, if you look at these drawings, they're pretty much the same as how it used to be up until recently, in our world. But, because of COVID, kids can't go to school and they have no choice but to, take classes online. And these online classes are getting extremely popular everywhere. A company like Vedantu in India, their growth over the last 1 year has been exponential. And if there weren't these pandemic, it would have been extremely difficult to make these changes because of legacy. I mean, there are a lot of people, system that are set up that's so gigantic that it's very hard to change because there are people with different interests in such ecosystem. However, these type of, pandemic, traumatic events leave no choice but to pursue changes. So I think in that sense, although these entire crises are very, very unfortunate, we're at the face of living together with new technology and the new world.
Yeah, well, the Terminator hasn't arrived, so we're good. Sango, would you agree on this? I mean, any thoughts on humans working together with machine the way forward? This is the future?
Yeah, I mean, I actually same page with JP what he mentioned, because this is just a matter of timing, but we already adapted. And also, as JP mentioned about that, actually some of the companies, and not just school, but some of the company, they used to be doing, their business, remotely. They don't have actually any offices, but they are still doing very well. I mean, it's not exactly the same to, work with machine, but, actually this pandemic, always, the people have some concern about each other's. And the interesting is that in the past, actually, people look for, it's like, small tiny houses, simplistic. But these days, we are, more looking for the big houses have some terrace even in South Korea. Means that, okay, we should be isolated from others. And also this, every service and every business, and kind of, he mentioned about the laundry go and also food delivery as well and other services. Everything's really fine by ourselves to do in my home and in my office. So it's not just machine, but let's say some service and machine and AI. Yeah, we already be adapted. So I agree with it.
Yeah. MS, I've saved you for last because, with government view and all that, it's probably going to be the hardest question to answer when we look at the two scenarios. One scenario, the vaccine goes well. The other scenario, we go back into lockdown again. I mean, surely the government must be so cautious, but at the same time, it's great to see that everyone has adapted to this new normal. Do you have any thoughts on this, MS?
Yeah, yes, as a government agency, the employee, I also hope the bright future. So yes, and since Korea government is doing its best to secure sufficient vaccines for Korean people, and I think Korea would be able to suppress a COVID-19 virus. In this case, I think the growth rate of VC investment of Korea would be back on track very quickly, and the level of interest in marginalized sector like travel or service sector would rebound. But as you mentioned, we need to prepare the gloomy future as well. In case the vaccine was not so effective, so we failed to have effective controlling measures, then we may have to find ongoing solutions to boost venture capital investment in Korea under the pain of COVID-19. People cannot live with COVID-19 continuously, so we need to do something. So one of the examples is venture debt. If Korea government prepare venture debt, that venture debt could be a good solution, especially for the startups suffering with their short cash runway under COVID-19. And in collaboration with another government agency, KIBO, the Korea Technology Finance Corporation, KBIC, is looking for new role to create venture debt market of Korea. At the moment, I think the providing venture capital information to people could be a realistic option. Additional one is secondary fund. Some LPs could fail to respond to capital call of general partners like KIP or SoftBank. So under this liquidity crisis of COVID-19, KB could design secondary fund, the managed directly by KB, or the secondary fund entrusted to private players. Actually, in 2020 September, we allowed one of our local partnership funds, Capstone, to sell all the portfolios to new LP. This was first attempted tail-end way of secondary transaction. To have liquidity issue of LP, KB could be a pioneer in secondary fund market. Well, thank you. Yep.
Okay, we've got about 2 or 3 minutes for some closing thoughts. Very quickly, if I could just get one comment each on closing thoughts as well as the government's role in tackling this pandemic that we're in. Just one thought each. Could I start off with you, Sang-ho?
Okay, sorry, I was mute. Well, it's not an easy question. Wow. Okay, what I want to say about the government actually, it's not actually, okay, let's say, well, many of the startup companies are doing their business very closely these days with the foreign market as well. But, some of them have generated their revenue in another country, or they should meet their partnership in foreign countries for exceeding their business. What I'm talking about, it's like the fast track, no 2 weeks quarantine, should be, applied broadly to these startup companies and VC as well. Because, what about just a week quarantine, not just 2 weeks quarantine? So I know this is not on a KVIC, and this is not an easy matter, but yeah, always because I was really, actively investing in foreign market, and also I really try to make my particular company to, go abroad. But these days, everything stopped. So yeah, just, shorten the quarantine will be really fine for my startup companies. Yeah.
JP, any thoughts on that very quickly?
Sure. I'll make it quick. And first of all, I'd like to, express my gratitude to KVIC and Ministry of SMB for their enormous effort to boost the startup ecosystem. Their I think work and policies been very effective, and we're also very well aligned with KVIC in terms of how we invest in Korea. Korea is a country with a lot of wonderful founders. However, I feel sometimes deeply regretful that some of the other government ministries and especially congressmen have a slightly different perspective on this. Whenever these startups are taking off, start building large scale business, started getting regulated. One of our partner companies, SoCar, the company that used to offer a service called Tada, which was a ride-hailing business that was really popular until recently, was banned by the law. And I recall last September, Jerry Yang, the founder of Yao, was in Korea. I had dinner with him, and I proudly bragged Tada service to him, and he actually took it to his hotel. And I told him that this is going to be the future Uber of Korea. And about a year later, when we found out that the Congress, banned the service, I was very sad, right? And it was like a symbol of the transportation revolution in Korea. So one thing I just want to point out is, the largest internet company in Korea, Naver is valued at 45 billion, Kakao at 30 billion, Ura Brothers was acquired at 5 billion, while DoorDash IPO'd at 60 billion. We don't even need to talk about Facebook, Google, Uber, who are at 800 billion. ByteDance, which was valued at about $100 billion, while the company is only 7 years old. The internet space doesn't have a border. It's a global market with global competition. And I think, some of these high officials, I hope they look at these startups, companies from such perspective, and they should listen to more of, what they think, not just on the legacy side. And I could go on forever, but I wanted to make this as my closing remark, that, hope we could, help our, startups here in Korea to become as large as Facebook or ByteDance, beyond its border. There's no need to fight within the country.
Thanks a lot for that, JP. I suppose it does make things a little bit uncomfortable because of how we all have to adapt and change MS. But from government point of view, do you have any thoughts on this, on the government's role, on how we can all progress and get through this pandemic together?
Oh, definitely it's not uncomfortable to me, not at all. And yeah, thanks to the comment from JP, yes, I think the Korean government should take it very seriously, like for the case, SoCar and Ura Brothers. So yes, I would convey them those valuable opinions to the government of Korea so they could listen valuable opinions. And for the Sangwo's comments for foreign markets, I want to emphasize the KBIC's strong relationship with Southeast Asian market, since this fireside side chat is now on the Southeast Asian players. So, as all of you know, KBIC is operating Singapore office for this region. And last year, KBIC has committed into 2 Southeast Asian speakers from Singapore and access from Hong Kong. In addition, this year, we committed into ADB Ventures Investment Fund. This Asian Development Bank, they launched their first venture capital fund, and they would boost the impact investment of Asian Pacific region. We are planning ongoing commitment into Southeast Asian venture capital funds. So I hope this can help startups of both Korea and Southeast Asia overcome the adversity of COVID-19. Well, thank you for listening. Yeah.
Yeah, we definitely hope for a better 2021 and beyond. I have been speaking with JP Lee from SoftBank Ventures Asia, Sang-Ho Park from Korea Investment Partners, as well as MS Kim from Korea Venture Investment Corp. Gentlemen, thank you so much for taking the time to join me in this fireside chat. Really hope we get to do it again soon in future. Take care and stay safe.
Thank you. Bye-bye.
All right, we are in the ASEAN-Korea Global VC Conference. You just heard our first panel discussion, a very interesting one. We've still got 2 more that are coming up in the course of today. Up next, if you are an investor in Southeast Asia, you really want to stay tuned for this. We are going to show you some very carefully curated Korean startups. Now, these guys want to expand to Southeast Asia, and we have 5 startups for this first pitching session. Each startup will have about 10 minutes. If you have questions, I believe you are logged on the Switch platform. You're very welcome to visit their digital booths and leave your comments there, or if you're tuning into us via YouTube Live. You could also leave your comments in the or your questions in the comments section. I beg your pardon. And the guys who are pitching, if you have time within this 10 minutes and you wish to address any of the questions or comments that are coming in, please feel free to manage the 10 minutes on your own. All right. Okay. Let's start off with the first of 5 pitches. We welcome to take the stage, Pold. Over to you.
Thank you all for being here. My name is Jongjin Baek, and I'm the Global Sales Team Leader for Poland. Okay, let me introduce Poland with some video clip.
To its background story. The developers were safety specialists at Hyundai Motor Company who became concerned about child in-car safety when they became fathers. How can we make traveling with our lovely kids safer? As they weren't satisfied with existing car seats, they set out to build the safest car seat themselves. To do so, they didn't just use simulations, but also actual crash tests, and this led to developments such as the locking belt that holds the car seat more securely so it can't jump out of place, the wide load limiter that transfers the load generated in any collision to the seat belt instead of the passenger, and they developed ball guider technology, which allows the seat belt to automatically adjust its angle to your child's body, ensuring a unique standard of safety. Also, as the developers personally know all about the cost of replacing a car seat as your child grows, they developed an all-in-one car seat that can be easily adjusted to fit as your child grows from a newborn baby to a 12-year-old. Furthermore, they also developed the world's first cooling seat pad, the AirLove series, that has an air purifier function to deliver cool and clean air for the child who finds thick padded car seats too hot even when the air conditioning is on. The AirLove series offers comfort and car safety for children and can also be used in your stroller. Poland will continue its research to develop products beyond car accessories for your children's safety and your peace of mind. Designed and built with a father's love. Poland. Poland is a trendy car seat brand.
So first, as you can see from the clip, Poland is a manufacturing specialist startup. We were selected as Hyundai Motor Company's in company venture in 2016. Before splitting paths and moving forward alone in March 2019, after 3 exemplary years of growth and innovation with Hyundai. Well, we are a young company made up initially of just 4 employees who in the initial 9 months made $6.5 million worth of sales. In the first half of this year, we improved upon the initial 9 months, achieving sales upward of 10 million. The Polish family is now made of over 60 hardworking individuals who share the same goal. And with our current rate of growth estimates showing that our final annual revenue could be approximately 16 million. By 2021, we aim to make over 30 million of revenue and employ a further 40 of the best and brightest to help us to achieve this. So how did we at Poland establish a presence in such competitive market as the one for car seats and childcare products so quickly? The answer is a variety of product lineup. When Poland planned to expand into childcare market using a car seat as its major product, people asked us, is now really the best time to go into the baby goods business? This is more than simply a case of hanging around with too many pessimists. The birth rate is dropping every year. And the baby goods market is notoriously conservative, where consumers remain loyal to brands with proven success. But at Poland, we think differently. We have noticed that while the birth rate itself is decreasing, demand for car seat is on the rise owing to the advance of child safety regulation and a renewed public awareness to the matter of safety as a result. The car seat market was growing on average by 5% globally per annum, and yet those competitors who spoke about having ears on us didn't appeal to the taking advantage of this. They had similar products but weren't marketing or innovating the potential of car seat. This is where we differ. We developed a new product and marketed it as such, a totally new, reimagined product. A car seat that lasts all of childhood, a car seat you can buy and never have to think about the safety of your child in transit. A car seat with built-in wire load limiter function absorbing shocks. A car seat that maximizes children's comfort using precise ball guiding technology. We have quickly prepared with a lineup of car seats for all age groups, considering children's safety, comfort, and cost effectiveness. Moreover, we actively relate to our consumers that this is made by Hyundai Motor's researchers and has its safety verified by actual vehicle crash tests. Thus, Poled's product is quite simply and probably the safest. As such, the market has responded, and Poled has become a popular household name among families within a year of launching our first car seat. The seats went on to achieve the most sales online and at baby fare of what's currently on the market. However, Poled isn't resting on its laurels. In order to continue and increase revenue, we continue to develop and launch products alongside our car seat. Poled launched car seat-related accessories for both parents and children, and notably the launch of Air Love series, the world's first car seat for infants with built-in air purifier, saw us record over 50,000 sales in summer 2020 alone. Looking beyond car accessories, at Poled we have launched multiple sub-brands, Poled Ideas, the lifestyle changer powered by ideas. Poled Room, to give the pleasure of styling and interior, and we continue to develop as a home appliance brand offering a UV sterilizer, pet supplies, and playmat. At Poled, our strategy focuses on branded technology and safety and maximizing its synergy through a variety of sub-brands. We are not stopping our domestic performance during 2022. Even amid such difficult circumstances, globally has seen us establish a global expansion strategy, successfully exporting Poled products to Czech Republic, Poland, Singapore, and Thailand. Currently, we are rolling out our export process to Japan, USA, and Australia, while similarly stepping out into the global e-commerce market, covering both B2B and B2C. In 2021, 3 co-founders and 63 employees hope to prove that Poled can be the next great global enterprise. Thank you.
Well, thank you very much for taking the time to pitch it to us. You've just heard from Poled. Interesting. Yeah, safety for infants, as well as a child seat that sort of self-ventilates or self-cools. I'm sure that's got a lot of people's attention. Again, if you're on the Switch platform, do visit the digital booths of the various startups that are pitching to us right now. We're going through a series of 5. We've just had one. Also, if you're on YouTube Live, do feel free to leave your questions in the comments, and if the guys pitching have enough time to manage within that 10 minutes, they will try to address your concerns. All right, up next is Together Apps. Guys, you have 10 minutes. Over to you.
Nice to meet you all. This is Ryan from Together Apps company in Korea. First of all, thank you for giving us the opportunity to do IR in this event. We are Together Apps and brand name is Together Funding. We operate P2P lending platform business. For helping you knowledge, P2P lending platform means connecting investors and borrowers. Now, we are number 1 P2P lending platform for consecutive 5 years in the Korean mortgage market. I'm going to brief our company information memorandum, and contents will be including company introduction, major performance, business status, global business, strategies and visions, and summary of financial statements. In terms of company history, we established in 2015 with mortgage loan as a main business. Then 2016, Together Apps creates P2P Financial Association as the first director of association to protect investor, borrowers, and ourselves. And over time, in 2020, we have been acquired 16 patents and T3 grade by Korea Corporation Data Technology Capability, which is award given to a company with excellent IT technology. Also, as November 30, 2020, accumulated loan amount exceeded $792 million US. All our employees are professional and specialized in mortgage financial sector. Our CEO, he has been worked at mortgage company for 18 years. Based on his mortgage market experiences, he knows all risks that may arise when dealing with mortgage products. Thanks to that, Together Apps default rate is only 0.23% with loan balance $239 billion in 2020. We have very outstanding employees in various fields, including finance, accounting, IT, and law. With those all experts, we will continue to look for growth potential and take responsibility for the risk management. As you see here, we have 16 patents, all related to platform systems such as automatic evaluation of credit rating, valuation of mortgage, and payment management system. With those patents, we lead fintech industry in Korea. Now let's talk about our main performance specifically. Think about what the market differentiation points are. First, Korean mortgage value, especially apartment, has never been decreased, never. It is considered to be very stable and rather upward. Also, since government regulation in banking sector, such as loan to value ratio, interest limits, we are only company that can provide high loan to value ratio and reasonable interest rates. Second, government support P2P industry in cutting withholding tax rates of investors, those who are earned by P2P investment. Third, Together Apps is highly trusted by investors due to 0.23% of default rate. All experts are most concerned with managing the default rate, and our loan process is also optimized for managing the default rate. Lastly, we succeeded in the profit loss round in 2019 through lowering admin costs, stable loan repayments, and increased loan balances. Among the P2P industry, we maintain the lowest default rate in the market. It is because our outstanding management of loan process, but also the characteristics of product type, the mortgage loan. Those are our main products. However, now we are more focusing on mortgage products, which is given to 8 to 12% of investors' profits. Repeated saying that, we accomplished $729 million US of the accumulated loan, $541 million of accumulated repayment, 0.21% of apartment default rate. We account for 51.7% of total amount of accumulated mortgage loan of the top 5 competitors. In terms of loan balance, 54% accounted of competitors. In both ways, we have more than half of the market share. We will put every effort in to keep this rank in the future. This page shows that what we've done so far, and you can see right upper shape graph, which is looking good. It shows that our sales increased 1.3 times when it compares to the last third quarter. In terms of default rate, we record the lowest rate compared to other industry due to our risk management system. All funds are entrusted to a third party, so we cannot handle or withdraw or use the funds at our will. Our third-party escrow account is managed by Gwangju Commercial Bank. Let me talk about business status. Since we operate the open market system, investors are freely sell their bond, either fully or partially to others. It gives investors various investment opportunities. Okay, I'll skip this page. We have very strong partnership with various companies, especially in part of collecting investors. KakaoPay, Toast, and Bank Salad is very important partner where they are contributing our loan balances. Let me explain the ongoing overseas business. Mongolia is our first overseas business. In Mongolia, we run a consumer finance business based on P2P platform. With Korea's successful experience in mortgage products, the Mongolian mortgage market is being targeted, and amount of money in the Mongolian housing market continues to grow as the market becomes more advanced. However, we are looking for another business with two P2P platforms since weighted average interest rate was decreasing about 10% in 2019 of mortgage loan. When we consider the exchange rate of Korean and Mongolia, 10% is not that much attractive for us. Nevertheless, we want to enhance company image and continue the success story of P2P in Korea based on success of P2P overseas. Also, we are trying to become a global P2P company beyond Korea by attracting overseas funds. This is how we operate platform in Mongolia. All flows are handling by automatic process. This is a strategy for expansion global business. First, we make a stabilization of products and DB, then expand our portfolio. Finally, seizing business expansion opportunities such as AMC, MPL, and insurance, and etc. Let me explain our vision and strategy. We will continue to invest R&D in next year. We will upgrade our automatic investment system, reducing investors' risk and launching customized loan products for small business owners. IPO is very important event to us. In order to meet the requirements for listing, all departments of Together Apps are working together to implement it and guided by a listed organizer. The most important of the listing requirements convert accounting method to IFRS will be completed in the first half of the next year. And Together Apps is expected to gain more trust from its users as a listed company by 2021. We successfully made turnaround to the profit in 2019. You can see we should cut unnecessary costs, run the company in a profitable direction, and maintain a surplus in 2021. Okay. Thanks for hearing our company story, and I really looking forward to contact after this event has done. If you have any questions, feel free to contact us, and we will send you tremendous data as soon as possible. So once again, thank you very much.
Thank you very much. We've just heard from Together Apps. Now remember, these Korean startups are looking to expand out into Southeast Asia. From that, let's move on to our next startup who will have the floor for the next 10 minutes. Ladies and gentlemen, please welcome People Fund. Over to you.
Hello, hi guys. This is KJ Min from People Fund. I'm head of the investor relations within People Fund. Today I will be presenting about our company, so it would be good if you could be excited when you see us. So today I'll be talking mainly about four things. One is our business in overview. Two is our strategy and our edge. Three is our key performance. And last, I'll just give you a bit of a highlight on our team. So our business in overview, like Together Apps, who just presented, we're also engaging in the marketplace lending sector in South Korea. Whereas Together is focusing more on the mortgage sector, we're focusing more on the consumer financing sector. So we're looking at the unsecured personal loan market, which I will talk about the market in brief in the next slide. And if I talk about our business model, we're basically matching borrowers and lenders who are wishing to get loans and who are wishing to invest in those loans. So as a platform, we match these borrowers and lenders, and we get about 3 to 4% of the commissions from the borrowers, and we also get about 1 or 2% of the fees from the investors. So in overall, we're taking about 5% as a platform in between. And the key characteristics of this platform is that three things. It's 100% digital. Two, we really have to emphasize our and upgrade our credit model. And three is we really need to have a bank-like infrastructure because we are looking at thousands of transactions every day. And the marketplace lending sector in Korea, if you look at the right hand of the page, has been steadily growing since 2016 and 17. So compared to other countries like Europe or States or China, marketplace lending in South Korea started pretty late. So I think the first company came out into the market in 2016. And ever since, it was growing at a steady and a fast pace. And up to date, origination volume has reached about 10 billion. So I would say it's pretty big. If I move on to the next slide, as I've said, we are focusing more on the unsecured personal loan sector. So we are looking at individuals who are wishing to get unsecured loans. And within the marketplace lending sector in Korea, there are three major players. One is us and two are other companies. And if you look at the market share within the players, as of 2020 first half, we recorded 58% of the market share. So in terms of dominance, I would say we're quite dominant winner within the sector and within the market. And as I've said, we are looking at the unsecured personal loan sector, and we're focusing on the non-bank loans, which were existent in South Korea. Since many of you guys wouldn't be really familiar with the Korean market, I'll just give you a bit of a flavor on how the market is structured. So in Korea, unsecured personal loan lending market as a whole is about 150 billion USD of origination every year. And of that, about 70 billion USD is originated from the banks. However, the banks are only focusing on the prime borrowers. So of the 10 grading credit ratings, if you're either 1 or 2 or 3, which is either super prime or very prime, you'll probably go to a bank to get a loan. And the interest rate there is around 3 to 4%, so it's not that high. However, if you're more like a near prime or a subprime borrower, you have to go to the non-bank lending sector, which there applies 16, 17, 18, or even 20% of interest rates. So the interest gap between the bank sector and the non-bank sector is actually quite large in South Korea. And basically, our approach is to tackle the non-bank market, which previously applied about 18 to 19 to 20% of interest rates, and refinance them into a more of a mid-range reasonable interest rate. So we are tackling that market, and what we are trying to solve is the high interest rates, and they're very inconvenient customer experience. So moving on to our strategy and our edge. As I've said, we are tackling the Korea's non-bank market, which is currently very expensive, and also players there provide very inconvenient customer experience. And most of the innovations regarding the finance sector within Korea at the moment is focused on the banking sector, which I previously discussed. So companies like Kakao, they've been very rigorous to penetrate and innovate the banking sector, but not many players like Kakao are actually looking into the non-bank sector, and we're basically doing that. So as a fintech player or a tech fin player, we are developing a very cool product, a very user-friendly product, where actually the borrowers can receive loans just within 15 minutes after they just started the application. Normally, if you go to other non-bank players like savings banks, credit cards, or capitals, you would probably take days. You have to fill out a bunch of documents, and you have to wait when your credits are reviewed. So basically, the experience that we're offering is a very different experience when it comes to the users. And on top of that, among all non-bank lenders within South Korea who are performing in the personal loan sector, we are the ones who are focusing on the risk management the most. So we are basically a very outstanding player when it comes to a risk and return. So if you look at the graph, which is presented in the center, it's basically a matrix or a table which is showing the risk and return ratio. And obviously, as you can see in the most of the graph, as the returns go high or the interest rates go high, the delinquency or the risk is also it also rises. However, if you look at People Fund, which is located here, we're applying the average interest rate about 13 to 14%, whereas our risk at the moment is very similar to the banks. So our risk return profile is outstanding if you compare to the other lenders across different sectors and industries. So that's the part that we are really focusing on. And with this risk management capability, what we're trying to do is we're creating a virtuous cycle within the marketplace lending sector. So we're controlling the risk, and with controlled risk, we are recruiting and securing lenders who are seeking for lucrative profits and stable profits. And with the secure lender pool, we are recruiting and we are acquiring more borrowers who are willing to get loans from our platform. And again, when we have more borrowers, it's easier for us to have better risk control, because risk control in the non-bank sector is really about securing and acquiring more data. So that's basically the play that we're doing in South Korea right now. So if I move on, I'll just briefly talk about some of the performance measures, not too deep. So we first started operation in 2016, and as of today, we reached about $1 billion USD in terms of accumulated monthly loan origination volume. So at the moment, we're the largest marketplace lender within Korea across all sectors. And yeah, we're doing pretty well. And because of our achievements and past performance, we've been actually highlighted from the media quite a lot. So we were featured in top tier medias like CNBC, Bloomberg, Tech in Asia, etc. And also we were participating in many conferences as a notch speaker. And also we received a couple of awards from world's most recognized institutions. And lastly, a very brief intro on our team. So we are actually acquiring different professionals from all across the industries. So when it comes to the financing sector, we are recruiting professionals from the previous financial institutions like Goldman Sachs, Citigroup, etc. And when it comes to risk management control, we're recruiting people from Korea's well-noted credit bureau, which is called NICE. So we are a lot of people from NICE are joining our firm. And when it comes to product and technology, we have a lot of people from companies like Kakao or Naver, which are well-known IT groups. So in terms of talent, we are actually recruiting a lot of different cool talents who are actually really looking into innovating this Korea's non-banking personal loan market. So that was it for our presentation. I hope you all enjoyed it, and thank you very much. It was KJ from People Fund. Thanks.
Thank you very much for your pitch this morning. Just a reminder, we just heard from People Fun. All right, for the next 10 minutes, let's give attention to our next startup. Please welcome Lemonex.
All right. Okay. Hello, my name is Dal Hee-min, CTO of Lemonex, and I'm also a professor at Chemistry Department, Seoul National University in Korea. First of all, thanks for your participation. It's my great pleasure to introduce Lemonex's platform technology and drug pipelines in the Global VC conference. Lemonex is a global biotherapeutics company with next-generation drug delivery system platform technology. Based on this first-in-class solid nanoparticle-based drug delivery system, we focus on developing cancer immunotherapy and RNA therapy. First of all, I will explain about Lemonex's drug delivery system platform technology named as degradable, and then formulation study and scale up of degradable. Next, I will give you information about drug pipelines of Lemonex based on degradable technology. Lemonex is actively involved in global activities, including various conferences such as mRNA Healthcare Conference and a JPM partnering meeting. In addition, I gave a presentation about degradable technology at the World Economic Forum in 2018. You can find the presentation video at YouTube. The degradable is a modular drug delivery technology based on highly porous solid particles. In the pores of degradable, various types of APIs can be loaded, including RNA, antibody, cytokine, DNA, etc. Degradable can be customized for its desired purpose and types of API, and therefore it can be applied for diverse applications. Degradable is biodegradable over time in the body. It provides long-lasting, sustained release of the cargo at the target lesion, and is compatible with various injection routes such as subcutaneous, intradermal, and intramuscular injections. Unlike lipid nanoparticles, degradable can be manufactured as a solid powder form and stored and distributed at room temperature. I'd like to emphasize that we finished GLP tox study of degradable in various species. Furthermore, we have established scale-up process in our own GMP facility, which enables production of 20,000 vials per batch. We are now ready for human trials and will start first phase 1 study in early 2021. Based on degradable, we are especially focused on the efficient delivery of siRNA, mRNA, and proteins, including cytokine and antibody as API, mainly in the areas of cancer immunotherapy and intractable disease therapy. Degradable has a highly homogeneous size distribution, and API, degradable complex formation, can be completed within 10 minutes at room temperature. Lyophilized degradable powder is stable more than 2 years at room temperature. Final drug product would consist of 2 vials, API, and degradable as an excipient. Before injection, 2 vials are simply mixed together, and you shake the vial several times, and then you get homogeneously dispersed solution of the API-loaded degradable. The loading will be complete under ambient condition within several minutes. You don't need any sonication or vortexing to obtain homogeneous dispersion of degradable. Let me compare Lemonex with other companies which develop siRNA therapeutics, Alnylam, Arrowhead, and Dicerna. It looks like all of them use a similar technology towards similar target diseases. They are using LNP, lipid nanoparticle, and GalNAc technology for siRNA delivery that allow mainly only liver-related diseases as target diseases. However, degradable could target many different organs, including liver, skin, and muscle. Also, it is compatible with various administration routes, SC, ID, IM, IV, and even transarterial delivery. I expect that our company value will become somewhere between Alnylam and Arrowhead very soon because of our advantages of our own drug delivery system technology degradable. For the delivery of drugs, degradable drug complex can be prepared by mixing together in a solution. The loaded drug inside degradable can be protected from enzyme-mediated degradation and is efficiently delivered into cells by endocytosis and then sustainably released inside the cytoplasm of target cells. Currently, the widely used RNA delivery method is LNP, which has many limitations actually. LNP shows unstable structure, low drug loading efficiency, broad size distribution, and short half-life. Our degradable can overcome those limitations of LNP. Furthermore, degradable can deliver not only RNAs, but also proteins inside, including cytokines. We have various drug pipelines under development. We will start phase 1 clinical trial of LMS401, which is the first siRNA drug in the dermatology in early next year. We also expect to continue to enter into clinical trials of next drugs, Volkine 2, LMS403, and LMS404. Lemonex is in partnership with global pharmaceutical companies to develop innovative RNA therapy and cancer immunotherapy using degradable. We will be expanding these global partnerships. Also, we are expecting IPO in coastal market in late 2021. By using degradable, you can improve therapeutic efficacy while reducing toxicity. Important benefits of using our platform technology for drug delivery system also include sustained release of drugs and safe and convenient injection of biologics. In addition, degradable is modular platform technology, which allows convenient drug loading by just mixing together at room temperature. As a summary, I explained about degradable platform technology that can be applied to diverse APIs to solve medical unmet needs and especially powerful in the areas of cancer immunotherapy. Degradable technology addresses important areas of medical unmet needs, which allows much less systemic toxicity and less adverse effects while achieving higher therapeutic efficacy. We are continuously expanding our pipelines by using different proteins and various RNA sequences as API. We are confident that degradable technology, which is the first-in-class solid non-particle-based drug delivery system, can open a new revenue for broad spectrum of biopharmaceutical therapeutics. Thank you for your kind attention.
Thank you very much. We've just heard from Lemonex. All right, it's time to move on to our final presenter for this first pitch this morning. And for this, for the next 10 minutes, we welcome Future Medicine. Over to you.
Hi, everyone. I'm Wansuk Jung, CEO of Future Medicine. It's short time, 10 minutes, so let's start. Future Medicine is Korean bio venture company having nucleoside-based new drug discovery platform. Also, we have our own R&D center with our system capable of independent drug synthesis and screening. In our lab, we are focused on 4 different areas, which are fibrosis and inflammation, antivirus, oncology, and immunology, and hedging the risk caused by a long R&D time. We take our licensing strategy on each development stage. Future Medicine was founded in 2015. We have Seoul National University Professor Lakshin Jung as a CTO and inventor, who is a world-class expertise in nucleoside research with more than 30 years experience. So we can have nucleoside library platform for new drug discovery. This is future medicine's pipeline. As I mentioned, there are 4 categories. First, fibrosis and inflammation. We have 3 indications: non-alcoholic steatohepatitis, so-called NASH, diabetic nephropathy, and glaucoma. Completed clinical phase 1 study in Europe, and it's now under the initiation of a phase 2 study globally. Second area is antivirus, potentially target RNA virus, and it is currently on the non-clinical stage with Korean government support program for COVID-19. In the oncology, one is immunotherapy and the other is tumor metabolism in preclinical stage. Lastly, we have autoimmune disease program focused on rheumatoid arthritis in the preclinical. Most candidates come from our own nucleoside platform. Okay, now let's see the category, each category. First, we target A3 adenosine receptor for the antifibrosis and the inflammation. NASH, DN, and glaucoma are the indication. As I mentioned, the completed the phase 1 clinical study without any problem. Recently submitted the IND for phase 2 glaucoma and planned for IND submission of NASH in early next year. Strategically, we're looking for collaboration research partner for diabetic nephropathy. Inflammation and fibrous environment, A3 adenosine receptor is overexpressed and seriously involved to the related disease. FM101 is highly specific to A3 adenosine receptor and control the fibrosis and the inflammation biomarkers. This is a simple MOA, mode of action of FM101. Now look at the detail of each indication. First is NASH. There is still no approved drug for NASH globally, as you know. We have conducted 2 animal models, STEM and Western diet model, especially fast food diet model. And we got the excellent anti-inflammation and fibrosis efficacy data. Most importantly, anti-fibrosis effect is quite amazing, 56% reduction to whole live scan test. So there's a high possibility of success in phase 2 study. And if we get a human efficacy data in phase 2, we expect it is easy for licensing out to global big pharma accordingly. Next is diabetic nephropathy. Also, we have a nice efficacy data in DBTB mouse model. As our expectation and similar to NASH, we proved the strong anti-inflammation and fibrosis impact. So, same. If we have human efficacy data in page 2A, lots of probably Japanese big pharmas will take our program because it is reported the CKD and diabetic nephropathy patient population are getting increased in Japan. So lots of Japanese big pharmas are interested in this disease. Next is glaucoma. Frankly speaking, in this field, there is excellent treatment like Charlatan. It's eye drop. However, it is reported eye drop has lots of side effects and resistant ratio. So medical unmet needs is oral-based treatment. It can be a supplement or even an alternative. We did both eye drop and oral treatment test and got excellent efficacy data, same as Charlatan. Santen and Thea, the ophthalmic disease-focused global big pharmas are very interested in this oral treatment. So we took the oral treatment based on the medical unmet needs and a potential business deal. This is result of phase 1 study, we proved its safety and PK data sufficiently for phase 2 clinical study. Next is oncology, especially immuno-oncology targeting A2A adenosine receptor. A2A adenosine receptor expressed by tumor cell interferes with the activation of NK and T cell. FM401 is A2A adenosine receptor antagonist and binding the A2A adenosine receptor by tumor cell and help our immune system. The data shows FM401 combination with anti-PD-L1 significantly inhibited the tumor growth. More importantly, we got hit compounds and started the preclinical study and business development activity to globally to big farmers. Next is autoimmune disease. FM501 is IRAK4 inhibitors. It's currently under non-clinical stage. It is a well-known fact that IRAK4 play key role on B-cell lymphoma and some of autoimmune disease, such as rheumatoid arthritis and atopy. In the lymphoma test, FM501 not only shows dose-dependent inhibition of tumor growth, but also good synergistic effect with ibrutinib. Also in the rheumatoid arthritis and atopic dermatitis, FM501 has an excellent efficacy data. In 2 different RA mouse models, FM501 treatment demonstrated a reduction in arthritis score dose-dependently. And in atopic dermatitis model, FM501 reduced the ear thickness in both groups orally and topically administered. Next is also oncology. We have FM701, it's so-called the 4th generation tumor therapy. Therapeutic focus is to target tumor metabolism. In other words, starve cancer to death. Unlike normal cells, tumor cells require lots of energy. This leads to metabolic alteration in tumor. Molet dehydrogenase, shortly MDH, is a primary enzyme playing important roles in supporting tumor metabolic alteration. It has been reported there are high correlation of MDH1 and 2 with various cancer, such as prostate cancer and so on. So we did the animal test and eventually we have confirmed our FM701's ability to inhibit MDH1 and 2 and subsequently effect in tumor metabolism. We found that the inhibition of MDH1 and 2 leads to inhibition of cellular respiration, AMPK activation, and ATP synthesis. Our data shows FM701 treatment significantly reduced the tumor size. So far, I introduced future medicine and the pipeline briefly, really briefly. To be a research-oriented company, we have been doing our best since foundation. Despite the short time, we have various candidates because of our passion for new drug development. For more concentration on R&D and stable finance, we are heading for Korean stock market IPO next year. Thank you for listening.
Thank you very much. We just heard from Future Medicine. That brings us to the end of the first round of pitches. There's still half a day more to go. In the second half of today's ASEAN-Korea Global Venture Capital Conference, we have 2 more panel discussions about the startup scene in Southeast Asia as well as cross-border investments. We also have a lecture about growth from startup to unicorn and 2 more pitching rounds. We are back at 1 p.m. Singapore time. The ASEAN-Korea Global VC Conference continues at 1 p.m. Singapore time. I'll see you then. Good afternoon from Singapore and welcome to the ASEAN-Korea Global VC Conference. I'm Elliot Danker, your host and moderator today, and you're back just in time for our next panel discussion. Just a quick recap this morning, we've been talking a lot about the startup ecosystem in Korea, the government's role in various countries, of course, in helping to deal with the impact of this COVID-19 pandemic. Well, for this next session, we're going to expand it out a little bit and touch on the Southeast Asian players. More particularly, we're also going to touch on the ASEAN countries that are involved in terms of getting the startup ecosystem up and running or dealing with the COVID-19 pandemic. So quite an interesting panel discussion, and it pretty much just takes us around the region this next session. We've invited Kwan Su from KK Fund based in Singapore. We also have Jamaluddin Bujang from Gobi Partners based in Malaysia, as well as Yong Nguyen from Do Ventures based in Vietnam. Gentlemen, thank you very much for joining us. We are sort of remotely connected to Vietnam and Malaysia, and our Singapore representative right here in the Singapore studio with me. It's great to meet y'all. Thank you for taking the time. I suppose I'd like to start off by getting you to introduce yourself and tell us a bit more about the company you represent. Could we start off with you, Kwan?
Sure. Thank you for having me here. This is Kwan Su, founder of KK Fund. So we are a early stage VC fund based here in Singapore, and we invest into early stage startups throughout the region, including also in Taiwan and Hong Kong as well. But more recently, we have expanded our scope to start looking at Korean startups who are interested in coming over to Southeast Asia. And, us being here in Singapore, very excited about that trend. We're seeing a lot of not just Korean startups, but also Korean conglomerates, as well as Korean governments, all taking a very strong interest into Southeast Asia. So we're here to support that. Thank you.
All right. Let's head over to Malaysia. Jamaluddin, could you tell us a little bit about yourself and Gobi Partners?
Hi, I'm Jamaluddin Bujang from Gobi Partners. I'm based in KL. Gobi, just a bit of background on Gobi. Gobi is a pan-Asian VC. They started off in China back in 2002. They came here in 2015, so we've been here for 5 years already. But since then, we have offices in other Southeast Asian countries. We have people on the ground in Singapore, in Manila, in Jakarta, in Vietnam as well. And we're trying to be very active in this space. That's what we bring. We are focusing on early stage as well as growth companies as well for this region. So we have country funds, and then we also have a regional fund as well to focus on growth companies. And by the way, thank you for inviting me to this event.
Thank you very much for taking the time. Okay, let's check in with Young from Do Ventures based in Vietnam. Tell us a bit about yourself and Do Ventures.
Hi, thank you for having me today. So my name is Zoom, and I'm currently the general partner of Do Ventures. So Do Ventures, we are a new fund. We just set up early this year, and we've focused on the early stage, mostly in Vietnam, from seed to Series B. So beside Vietnam startup, we are willing to consider to make the investment into the company who trying to expand their business into Vietnam.
All right. And Vietnam, of course, we will keep coming back to that because I think for the longest time we've seen Vietnam as an emerging economy, and they've really done well in spite of the COVID-19 situation, which is exactly what we are talking about today. COVID-19 and the ASEAN startup scene. So, like all around the world, the ASEAN region was hit hard by COVID-19. It's still struggling with it or trying to deal with it. We're trying to overcome all the negative results, the economic impact of this pandemic. We see once prosperous industries suffering, taking a bit of a setback as well. So we are going to talk about how the pandemic has changed the startup scene in this region in Southeast Asia. We've got about 35 minutes to get through this. Zong, I really want to start with you, Zong, because the Vietnamese startup scene, and I mentioned earlier on, we saw it as an upcoming economy and it was thriving even with the whole US-China trade war. And then we had COVID-19. Vietnam did very well as well. How has the ecosystem changed for the startup scene in Vietnam in spite of COVID-19?
Yeah, well, so COVID, I think hit everyone all over the world for 2020, and then of course Vietnam is not an exception, right? But luckily, Vietnam government has been, handling the situation very well, and of course we at the moment we only have 100 active case. And the life in Vietnam is back to normal. Already you still, can travel domestically. You still, going out for the bar, entertainment, everything. And of course, the mostly hit industry was tourism industry. The tourism industry hit badly. And of course, the airline, hotel, and though the startup in the interim industry was mostly affected by COVID, and in general, most of the startup company in the tourism business, they respond to the COVID-19 by cutting costs and trying to minimize their operation costs so that they can maintain the longer runway. And of course, because the travel restriction, the overseas investor cannot come to Vietnam to meet in person and to discuss about the investment. So mostly they have to save themselves by minimize the cost and maintain the runway. And but the other sector like food delivery, e-commerce, edutech, and the enterprise solution for in the digital transformation, they are luckily in the situation, so they are still growing organically.
Yeah, I think we've all benefited from those ecosystems as well. All right, Jamaluddin, your question gets a little bit interesting because you've got some history working in a government institution. You're now working for one of the most prominent venture capital firms in Malaysia. I'm very interested to get your view on the effects on the government side and the private side as well, because we saw how it took some time for the Prime Minister the Prime Minister of Malaysia to pass that budget bill, and here we are right now. The effects of the government response to the startup scene in Malaysia. What are you seeing on the ground, and what can you share with us?
Thank you. I echo the same thing as what Zoom was saying earlier. No country was spared from all this. When we first noted about this COVID thing, it started off back China, if you can remember, right? It was in December and January and all that. And we took notice of that. But we thought that, just like SARS, it's not going to have that much impact. But we can stop somewhere in between before you reach us, right? And I'm sure someone will come up with some smart solution to control the spread of the disease. And we had, Gobi had first-hand experience in dealing with SARS back in 2004, 2005 when they were in China. But we took note of the severity only like in January and February when we started to read news and people just drop dead while they're walking on streets. And not long after that, then came March, and then suddenly things got haywire, and suddenly the spread was very fast, and it affects all countries. And then like in other countries in March, the government imposed on movement controls and all that. And we were caught off guard, to be very frank with you. I myself especially, we got caught off guard, and almost immediately we go back to our companies and check with them. So how are you guys doing? Are you prepared to prepare something like this? This is going to be one in a lifetime kind of event. And we look at all the numbers. We check with all these companies in terms of their financial strength and all that. And by mid-March, we got all the numbers in, and then we thought that, okay, is it like three-fourths of our companies has really good cash balance in their accounts, but we kind of worry about when slowing down the business. So they're going to hit on the revenue, and hence it's going to affect on the cost. So we took action, just like any other funds. Some companies tend to handle their cost management better. Cutting down workforce and all that. So that's on the private side. The government, on the other hand, unfortunately for Malaysia at that time, there was, if you remember, that was in February, and the government just changed hands again. There was only like slightly almost, after 2 years of the election, well, almost 2 years after the previous election, and things was just a bit uncertain. So you got the political side, moving around in a loose manner, and then we got this coming. So it's a bit haywire, at that time. But the government did whatever their best to control the situation. A lot of some initiative was announced to make sure that the economy is will not be affected much. And if you notice, the most recent budget, which is just now less than a month ago, that was the biggest budget in Malaysia's history. All were designed to make sure that the economy will survive, will be able to maintain the growth. In fact, the growth number they're looking, I don't know whether they're going to be achievable or not, is anywhere between 6 to 7% if the economy rebounds. Of course, it's subject to external economies as well, because Malaysia is a very export-oriented country. So that's on the economy side. Now, I think a lot has been talked about the impact of COVID and how it affects the companies, the people morale, the economy and all that. I think there's positive side of it as well. For one thing, I myself, I never ordered food before COVID. Now I'm good. I get used to that. I order food from Food Panda, Grab Food, and all that, and not just me, but also my family members as well. And I'm beginning to accept that this is a way to go, because when we work it out backwards, before that I would say, I don't need to order food. I can still go out and I have more choices right in front of me. Out of 30 menus, I can pick and choose which one. Now, I thought at the time it's like ridiculous if I just go and order food and get it delivered to me, right? Now it's like, hey, it's acceptable. So that's just on the consumer side. But I think on the company side as well, they realize that they cannot survive this this pandemic if you don't digitalize, right? And a lot of companies begin to digitalize, get access to to customers through mobile and all that. So so that's good, because that change is permanent. Once you go digitalize, you want to go back. So this is very good change. And even as things like when you go to restaurant now, and people, the people who serve you food were wearing masks, right? That should have been done even before COVID, right? So which is good. And I hope that thing will continue. And then I think in general, I think we all realize that the world is also small, and everyone has a role to play to protect the environment. If I don't wear a mask, actually I'm hurting other people, right? I can spread the virus to other people, but not realizing that if other people don't wear a mask, I can get affected as well. So we're beginning to, I hope people will realize that, we all interconnected. We all have to look after one another, whether you know that person or not. It starts from yourself. that's probably I look at it when you ask about whether the government and the private sector, they all work close in hand, close together, because there's no way we all can survive without everyone's involvement in tackling this.
Yeah, certainly very, very true there. And I have a different kind of problem, Jamaluddin. I order too much food. Okay, Kwan, I'm going to turn the attention to you now. In Singapore, we have a saying, same, but different. So you see everyone's kind of going through the same problems, us as well, but different in the sense that for a while there seemed to be hope. For a while there seemed to be, hey, maybe we'll get into phase 3, the fully reopen the economy, or travel bubbles that will come out. That did not happen. How much have you had to adapt and readapt and change and rechange? Tell us more.
Sure. So I think everything that was shared by the two gentlemen applies to us as well, and what we see. So, for example, from the startup side, we actually have to basically shift our focus a little bit from mainly looking at new investments into, okay, how do we focus a lot of our efforts into helping our existing portfolio companies to get through the COVID situation, especially since not many of the founders have gone through this type of situation before. They have not gone through, for example, the great financial crisis of 2008. Maybe they're still in school back then. Or if you're old enough like me, then you've gone through SARS and you're like, hey, this one is not a joke, no joke, seriously. So I can still remember very clearly my brother, who is living in Shanghai, visited me last December. And I was starting to read about these, this kind of mysterious coughs and flu-like symptoms people are having coming out of China. And my instinct, having gone through SARS, is, oh my gosh, something's going on. I don't know what it is, but something's going on. And of course, when I try to bring it up to my friends and people who I interact with here in the ecosystem and also outside of the whole tech ecosystem, they're like, you guys worry too much and so on and so forth. But it turned out that we were not worried enough. And even for myself, I have myself to blame. I was still planning my trips, flying all over the place, even for March and April. And this was back in December. I still booked the tickets and everything. So anyways, coming back to this, we have had to tell our portfolio companies, yes, focus on your cash burn, because I keep telling them you can control your expenses, but you cannot control your revenue. Right? That is out of your control. You can do your best, but that is out of your control. You can only tell me exactly how you'll spend your expenses, so plan for it wisely. So that's the first thing that we did. And then, of course, we have to help our portfolio companies take a look, right? Because pandemic, back then, yes, in March, April, no one really knew the extent of the problem. And fast forward to today, yes, people have more knowledge, but still, there's still debates as to whether or not, depending on the industry, this shift in consumer behavior, in patterns, Jamaluddin didn't used to order food, now he orders food. You have new patterns and new behaviors that come out. And how do you really, prepare for that? Yeah. So we've had to spend a lot of time helping our portfolio companies do that. But in addition, we've had to adapt ourselves as a VC. And the reason I say that is because for KK Fund, we are an early stage investor. What does that mean? So usually it's pre-Series A. And this is, for those of us watching who may not be as familiar, these are basically startups that have not yet, let's say, had a proven out, let's say, product market fit. It's not yet proven. They're still trying to get that right and maybe on the path to scaling up. So still pretty early stage. And therefore, we have had to say pre-COVID, the only way that we can due diligence and make an investment decision is to meet like this, face-to-face, right? So then I get a sense of the founder, I get a sense of his or her team, I get a sense of the office culture if I visit. So pre-COVID, we were traveling on average almost every other week, sometimes every week. And meeting the founders face-to-face. And because of COVID, unfortunately for us based here in Singapore, no travel bubble, we cannot travel. We cannot travel to Malaysia. I cannot travel to Vietnam and see Zung and all of the amazing startups over there in Vietnam. I can't meet them face to face. There's only so much we can do over Zoom, right? We don't get that human interaction. We don't get to read the founders, perhaps, right? Body language and the sense and kind of building the rapport. We can't do that. So we as VCs, we have had to rethink how do we remain competitive? How do we identify the right founders to invest in? And also, even for our portfolio companies, there's only so much that Zoom sessions will do, right? Like, how do we build more rapport and trust in this day and age where people still can't travel and we have to rely on, digital means? Yeah. So that's a big challenge for us, and I think for the whole industry to think about as well.
Yeah, a broad question for everyone, for the three of you gentlemen. In spite of the fact that we're facing these challenges, and you could try and compare it to SARS, no way, it's worse. It's scarier, but what's weird I find is, well, I'm not sure if weird is the right word to use, but I find there's still appetite for startups. This is for all three of you, perhaps respective to your region. Why do you think that appetite still exists? Kwan, let's start with you.
Sure. So I think this is part of what Jamaluddin had mentioned as previously.
Okay.
Because of COVID, we've had to adapt to digital. We were forced in some instances, right? Companies are forced to experiment with working from home, right? Which usually never happened before, right? Yeah. Entire companies said to their staff, until next year, middle of next year, everyone is working from home. That has not happened in such a massive scale globally. So we're all learning on, how to adapt to this. And as I said, COVID just accelerated the path to digitization. So if you look at numbers, and I'll quote from the I think it's e-economy study that was done by Google and Temasek. They actually noted that for the first half of this year, the investments into startups in Southeast Asia has actually increased compared to the last second half of 2019. And so, I think it's a great time, actually. This may sound counterintuitive, but for startups and also VC investors.
Right.
Because it's during these times of pandemic that the businesses are actually forced to adapt and have to learn to cope. And almost by default, you're having to innovate, which is at the core essence of technology and startups ecosystem. So this is a great time because people are forced to experiment and forced to innovate. And for some of the investors, maybe they're thinking, hey, this may be a good time to invest into a startup with a perhaps lower valuation because there are more startups reaching out to investors for money.
Right.
But I think that again is a good time to see how resilient, how adaptable the founders are, startup founders, and I think that to me is the best indicator of whether or not you can invest into these startup founders. Okay. So this is an opportunity, I think.
Okay, turning crisis into opportunity. Kwan highlighting a lot of character traits that are necessary. Jamaluddin, this one's for you as well. Same question. What's driving the appetite in Malaysia, in spite of the fact that it's a very noisy political environment, but it's a huge, huge market. What are you seeing?
Well, yeah, you're right. Like I mentioned earlier, there's so many things going on in Malaysia at the same time earlier this year. I don't know if it's fortunate or unfortunate, but we've come to a point where now, things are stabilized. I think people really want to focus on what's next, right? Okay, what's going to happen? It's on the government side, I think, like I said here, the budget was excellent. Was a brave step by the government to have a deficit funding this time, despite it was the financial government finances is not as good as before COVID, but it's a good thing because it instills confidence in the economy and people. Now, I just want to mention a bit on what the government has done also since earlier this year. There are many things the government has also introduced. The government has provided relief funds for startup companies, of course, for any other business as well. But definitely in the startups, they've done that. That was channeled through the development banks. The reason why it's development banks is because development banks is direct owned by the government, and also through venture debt fund to provide funding for companies affected by COVID, especially startup companies. And that's just on the debt side. Also on the equity side, the government also is providing fund. A few months ago, they announced that they're gonna give out 150 million US worth of funds to eligible VCs, to invest in an accelerated manner for startups here in this country. And the private sector side, the banks especially, these are private banks I'm talking about, and they have allowed, to allow extension on loan repayments and interest, which helps a lot of small, SME business actually, and consumers. The government also provided tax benefit to property owners who reduce rental charges. Of course, it's only applicable for this year, only for this event. And recently, the Provident Fund also allowed depositors to withdraw some funds from their own account. This is the fund, by the way, for your own retirement. So it was a tough decision, but at least the government is willing enough to allow people to take out their money, some part of their money to help people to cope with this pandemic. So all in all, if you do all that with all the changes that Kwan has just mentioned earlier, things are reacting positively to this event. I want to stay positive. I think you've read some news that the vaccine is coming soon, and hopefully things will come back to normal within the next 1 year, 6 months to 1 year.
Yeah, that's definitely the optimistic picture, and we really hope it turns out that way. Zung, time to turn our attention to Vietnam. Could I get your thoughts on what has kept the startup appetite on a high in Vietnam? What's driving that appetite? Could you share with us?
Yeah, so I think I have the same view with Kwan, because the way we consume, the way we work, and the way we meet person changing a lot. And then that is why for the digital economy, like in the food tech, in the edu tech, even in the med tech, though the startup have more opportunity to grow faster. And then like the way we meet people before, it's very hard for people. Normally in Vietnam, we meet in person and discuss, and we spend a lot of time together. But right now, you only meet in person for only deep, important, decision making. Normally, just work via Zoom, work from home. Even in Vietnam, we don't have social distancing, but people trying to, keep distance between each other. So it also, change the mindset of the leader, like the enterprise. We have more chance accelerate the digital transformation in the enterprise, like more enterprise solution. The market is more booming right now. And from the change, do venture, because we just set up our new fund early this year. So we have more chance to make the new investment, because the overseas investor, they couldn't come to Vietnam. And as Kwan mentioned, right, it's very hard for overseas investor to make an investment via Zoom. You cannot meet in person, and then it's very hard for you to feel the culture, to feel the founder passion. So we still make a new investment in different sector like in the vertical e-commerce, in the enterprise solution, and right now we see from my point of view, we see the pandemic, of course, is still a hard timing, but from our investment opportunity, we are very positive.
Okay, let's add on to what was just said, and Zung, I'll stick with you for this question, just to jump ahead so we have more time for another one. With regard to what the government has done in tackling the pandemic and what they're forecast to be doing next year, are you satisfied? Is there anything more you wish you could add to it, Zung?
So you mean in Vietnam?
Vietnam, yes.
Yeah, so in Vietnam, the government, let's say, if we say about Vietnam government action, just only one word, that is bravo. They have been handling the situation very well. And, very strict in Vietnam. They track everyone from, any case from community, they track. And we have you may be, a criminal if you don't protect yourself from COVID. And then if you don't wear mask, you get a fine like $150 in the public. So the government really strict on handling the situation. For the economy support, they have the policy, but for the detailed policy, the tax reduce, and though the support for the cash flow for the company, they're still doing, but the detail, in the specific industry, I don't know exactly because I spend more time on the startup scene now. And we expect, next year when the vaccine are ready for everyone, the thing here is that the travel industry will bounce back because the tourism industry right now contribute about 10% of the total GDP of Vietnam. And even during the pandemic, Vietnam still a rare country, have the still growing in the GDP compared to the minus growth of the other countries. So we this year we about 2.6% of GDP growth. So if the vaccine are ready, I think the economy maybe have the much better growth compared to the current situation.
For sure. We'll talk a little bit about vaccines or no vaccines in just a sec. But Jamaluddin, jumping to you, you spelled out Malaysia's plan for next year, economy-wise. Are you satisfied with what you've seen, and do you have a wish list that you wish you could add on?
Yes, I'm happy with what has been implemented by the government and the reaction and all that. But I really want to stay positive. I think everyone should stay positive because this is not the end of the world, right? We human, we always think positively as we move forward. But of course, when there's a lot of depressing news coming, hitting you again and again, you're kind of down. And but I think generally you can expect things to get better. To be a bit more specific on the question earlier, with what else can we expect? I think just specifically on the startup industry, I'm sure there will be a lot of pent-up demand coming up, right? The moment the market starts to recover. I think Mr. Zoom also mentioned, definitely travel will be among the first to rebound. They're going to rebound very fast and very, in a huge manner. You can see that when China recovered, people among the first thing people do is just go out and travel. So that's one thing. On startup, I think what's going to happen is, fundraising has basically dwindled down a lot during this period from the last 9 months, and will remain so for next few months. But once this thing clears, a lot of startups start to go back and start to raise funding. Of course, because they suffered as well. But to tap on this, the market rebound, they will start to go up and start to raise fund again. So I think the financial market and funding side will get busy again. We are preparing for that also now from our side. This will be the thing to expect as we go forward next 3 to 6 months.
Definitely, we see a lot of optimism or cautious optimism, depending on how you want to look at it. So, Kwan, here in Singapore, we have already seen some discussions in preparation for the budget to be released in February. But as someone that kind of looks at the startup landscape from a point of view, what are your hopes? Are you satisfied with everything so far? What do you wish more could be done?
To start off, I have to first say that I am just amazingly impressed, as a resident of Singapore at what the Singapore government has done, starting from the first reactions to COVID, to the phased approach, to then then also combining that. With releasing a combined budget support of around 90 billion, if I'm not mistaken. To all facets of the Singapore economy, not just startups, but also SMEs and many of the GLCs and other Singapore corporates as well. So we see that, but in addition to just support to the domestic economy, what is also quite amazing for me, especially in the last, I would say last week, Singapore announced that they're hosting the World Economic Forum Davos next May. That is unheard of. They've never moved the event outside of Davos, and Singapore is the first place that they're thinking of hosting it. That's amazing. And I think earlier this week, they signed a UK FTA. So that's, again, another pretty amazing achievement. And I think just this morning, I saw that the STB has signed a 3-year contract with the producer of Korean drama to start filming Korean dramas in Singapore. So again, not only do the Singapore government figure it out the comprehensive domestic approaches to fighting COVID, but at the same time, they're still looking out to how to expand, thinking for the long term. To answer your question, if there's anything else that I wish to see more of, again, not saying that they haven't done anything, but I think this is a great opportunity for education.
Right.
And what do I mean by that? We just talked about, amongst all of the panelists, we just talked about digitization. We just talked about people, being forced to have to experiment to learn how to order food online or, visit the doctor using your phone and do a lot of these things that one would never think about doing pre-COVID. So wouldn't this be a great opportunity to not just educate in terms of in schools, but also educate the PMETs, educate the SME owners, the folks working in the large corporates. What does it mean, and how should one prepare for the future in which digitization is becoming an increasingly important part of everyday lives? So I'll give you an example. For VCs like us, we talked about how people want to travel and how to have the relationship and connection. I think in many unscientifically verified studies, if you asked people what do they want to do most once the vaccine has been released, people say what? Travel.
Yeah.
Right?
Absolutely.
People want to travel again. People want to see their friends and family in faraway places. So that human connection, right? Like you gotta kind of figure that in. But on the flip side, guess what? Automation.
Okay.
Right? Because if you talk and survey, again, unscientifically, a lot of the large corporates, especially in manufacturing or where labor is a big component of any business, many will probably tell you, hey, this is actually a good opportunity for us to explore automation. Whether it's with robots or with AI, solutions and so on and so forth, that will have a fundamental shift in the workforce of the future. And how should we all be prepared for that? I think that's an important point, perhaps for not just Singapore, but I think for all governments to use this opportunity to help educate their population.
I really wish we had more time because we are running out of time. So very quickly, how does everything that you've discussed factor into your outlook for 2021? Very quickly, positive or negative? Quickly, why?
Okay. For me, very positive. We just said there's a lot of pent-up demand, and I think maybe I'm biased, but startups, one of the unfair advantage is that they can move fast and react fast.
True.
And so who else besides these startup founders who will be able to best take advantage of this situation coming into 2021 with the vaccine on the way? My bet is on startups.
Excellent. Okay, Zung, from Vietnam, positive or negative? Quickly, why?
Positive. We see more chance because this is time for normally startup born in the bad situation, right? To solve the problem. And then right now we see a lot of problem, and then a lot of startup will be born soon, and that's our future.
Okay, Jamaluddin, I know you are positive because only positive people wear really nice shirts like that. Tell us your thoughts.
It's Friday. It's Friday. Yeah, I'll stay positive. I think if this is one thing that we have to focus on. Protect the environment. Look after even to animals. I hope people will do that. Now, I will end with two questions. Number one, is this work from home thing going to be permanent or not? It remain open. I have talked to both sides. That there are good and bad points, but I think it's something we have to adjust as a company, even as an employee. The other thing is probably even more important is will there be another pandemic? I think this one is a bit negative. With global warming and all that, I mean, we don't know what's going to happen soon. This, again, is something new to us. Chances are it's not going to be a 100-year event anymore. You're probably going to shorten. So that what worries me a bit.
Really important things for us to think about. I've been speaking this afternoon with Kwan Su from KK Fund, who's based in Singapore, Jamaluddin Bujang from Gobi Partners, based in Malaysia, as well as Zung Nguyen from Do Ventures, based in Vietnam. Gentlemen, really appreciate your time today. Thank you very much. Take care and stay safe.
Thank you.
All right. With that, we will be moving on to our next segment. And once again, if you're just joining us, welcome to the ASEAN-Korea Global VC Conference. We are going to move to our second startup pitching session. We already had 5 this morning, and this time around, we are going to focus on startups from the ASEAN member states. This morning was about Korea. Now, ASEAN, we've got 10 startups from various countries, various sectors and stages to satisfy your appetite, so to speak. So we're going to break these 10 companies into 2. So 5 startups each will be vying for your attention. Again, you'll be able to address your questions in the digital booth if you're on the Switch platform. If you're on YouTube Live, you can also perhaps leave your questions in the comments section. And if our presenters do have time within the 10-minute allocation, they may or may not address those questions. We'll leave it to them to manage their time. All right, let's start off with our first startup looking for attention. For the next 10 minutes, let's give our attention to ProZima. Take it away.
Hi, hello. My name is Hawa. I'm from ProZima Technologies. I'm the co-founder and tech director of this company, cosmetic tech company. So we're playing. So technology is cocoa-based cosmetics, and we had partnered with Malaysian Cocoa Board, which is responsible for the development of cocoa industry in Malaysia, because Malaysia is the 4th largest cocoa producer in the world, and we have the Malaysian Technology Development Corporation, and after that we partnered Malaysian Cocoa Board to take VR tech and which is EMI and VEG. And the main problem of using the existing conventional cosmetic products are their inability to fully protect the dangerous rays from sun exposure, because sunscreens only protect sunburn, but it doesn't protect sun rays. And there are a lot of doubtful ingredients of prohibited components in the formulation of cosmetic. This will increase the risk of premature aging and skin cancer development. So with the relation to the technology, our cocoa-based extracts infused in this cosmetic, which has eminent photoprotective capacity and antioxidant properties, are safe for the skin. And other issues regarding conventional cosmetics are, it is happening in Southeast Asia, where a village hunts and roasts thousands of geckos to be used in cosmetics. So cosmetics are basically are products that we use every day, but in this particular country, they use these geckos as an agent to curb skin allergies and itchiness, and those geckos are sold for $18 per kilogram. And with the current technology that we're having, with the incorporation of cocoa butter, cocoa mass, and cocoa powder, as well as cocoa liquor, it is very efficient to actually inhibit the anti-aging process, because in our dermis layer of skin, it is comprises of 70 to 80% of collagen, and this will provide structural stability to the skin structure. However, collagen is easily dismantled by their enzyme, which is collagenase, and another one, elastin, is dismantled by elastase enzyme. And with the bioactive ingredients of epicatechin in the cocoa products, it has the acceleration of the skin aging. And we have actually 5 products under our cocoa-based cosmetic line, which is compact powder, blemish balm cream, liquid foundation, and loose powder and blusher. And the main function of cosmetic, as we know, we wish to enhance and manipulate the biological cues on our faces, and which is the color of skin, the symmetry, and the light of our skin. Apart from being able to enhance that, it is remarkably excellent in improving skin structure and improve the expression of collagen by the incorporation of vitamin C in the cocoa extract. It is beneficial in protecting against free radicals. Okay, moving on to the highlights of the results of the testimony of the products. We have actually tested to 20 respondents, which comprises from 3 different races of Malay, Indian, and Chinese. And we highlighted the remarkable transformation. And after 2 months of application, the visible wrinkle had subsided. And this is actually a constant application and help to improve the skin's health. And other than that, we also tested on the skin surface transformation in terms of volumetric enhancement. And it is apparently an excellent remark, where constant topical application will not only beautifying the skin, but increase the swelling of the stratum corneum of the skin cell, which has proven to increase elastin and collagen production in the skin. So we are in Southeast Asia, and we are actually targeting towards people who are searching for halal and progressive scientific cosmetic products in Asia. In Malaysia itself, we are spending almost 1.8 ringgit Malaysia billion, I'm sorry, 1.8 billion ringgit spending on cosmetics, targeting on anti-aging products will be favorable after this. And we are projecting that we going to grow because at this moment we are in the first year of pre-commercialization phase of technology validation and market validation. And our strength is because I'm from a biotechnology background, I have the understanding of the science of the cosmetic and the science of skin. And apart from being that, we wish to be registered under BioNexus Biotech Corp Malaysia. And with the experience from our team member, which is a professional makeup artist, from her perspective, she can actually leverage the technology to promote and actually to increase awareness of the natural based products. So in the near future, we are actually gonna distribute and doing technology validation and market validation locally in Malaysia, where we products. So I think that's about it, about our humble tech. That's all.
All right, thank you very much. Of course, we just heard from Proxima talking about cocoa-based cosmetics. Could that be the way of the future? We do apologize if the connection breaks at any point because we are connecting with various countries all around the region. It can be quite a challenge to manage at time. But if you do miss out on anything because of a poor connection, we urge you to head over to the digital booths within the Switch platform. That's where you can find out more information. Of course, leave your questions to these startups. All right, let's move on to our next startup. For the next 10 minutes, let's give attention to Tria. Over to you.
Hello, good afternoon. Let me see whether I can have my slides up. There you go. Okay, so organizers is a go. Okay, I guess I'll go ahead. Please, if you can follow on my prompt in terms of the slide switch. The slides are moving on. Okay, so hi everyone, my name is Pei Kang. I'm from Tria. So Tria is a footwear company based in Singapore, and I think one thing that we have been working on, which is quite exciting, is about how we can turn this food packaging waste into more. We can valorize them into useful waste after. So we have been mentioned by our Deputy Prime Minister Heng in last year's Singapore budget, and we have been, so far been quite lucky to be featured on quite a few platforms. So just a brief background of the company. So we have already crossed the $1 million mark in terms of revenue. We have been in operation for the last 4 years, and we've been doubling our revenue every year. So we got a few accolades, and in this case, also for the Emerging Enterprise Award, and we also been strongly supported by Enterprise. Next slide, please. So let us spend some time understanding the problem that we're trying to address. So if you look at the image in the middle, right, which is a Starbucks cup. Now this is single-use food packaging that is really not addressed today. What I mean not addressed, after it gets thrown away, where does the waste go? I think that's the question to ask. So what we call this is the end of life problem. So unfortunately, no matter what material it is, okay, whether it's compostable, recyclable, biodegradable, most of this waste gets incinerated or goes to the landfill anyway. Okay, and why is that so? It's like if you look at the picture on the left-hand side, now that is the max that you can expect in terms of food packaging waste. In this case, the more technical term, food service packaging. Okay, so because you have the oil from food, it is messy, it is thrown together with food, and that in itself actually don't make it very interesting for recyclers, because recyclers, they want your dry and clean waste, not your wet and messy waste. So pretty much this area of waste is unaccounted for. Nobody is interested in it. Okay, and in order, there are some efforts to try to recycle them, but in order to do that, you have to segregate the waste. And what does that mean? So this means that you need to have more human labor, all right, to basically separate the packaging from the food waste so that the food waste can be recycled or the packaging waste can be recycled. Okay, bad news is we've been trying that for the last 15 years. It does not work. Why does it not work? Because it's a matter of cost. If you look at the Starbucks cup in the middle, that costs you 10 cents. It costs you an additional 20 cents to segregate the waste. So, this, as much as it seems like a casual problem, but this is the roadblock to, to recycling of food service packaging and food service waste. So there are efforts, if you look at the right-hand side, there are efforts, for some companies whereby they come out with more biodegradable material, only to realize that the industrial composting grounds are not taking them. Okay, so today more than half of industrial composting grounds do not take such waste because they take too long to biodegrade. It takes up to 180 days. So, as you can see, this is a multifaceted problem that the industry faces. And, it is also symbolizes how complex it can be when it comes to recycling. So let's move on. So our solution here, we are not focused, we're not just focused on the material. Okay, material is one side of the story. Okay, yes, you can say it's biodegradable, recyclable, compostable, but that's a promise. If it's not composted, if it's not recycled, if it's not biodegraded, it's still back to square one. So we are focused on impact. Okay, our waste, when we collect them back, we turn them into compost, we bring them to the farm. Next page, please. And this is a program that we call Bio24. This is a closed loop solution, all right, that we think conveniently address food service waste. Next page. So if you look at this, there are two parts to the solution. In short, I'm just going to drop a few keywords: extended producer's responsibility. So so if you look at the packaging that we provide in the middle, we can basically replicate all the different packaging that McDonald's or KFC uses today. Okay, and after it's being used and thrown, in this messy waste, all right, so-called messy waste that you see in the bubble, it's actually no longer messy. It is just one single organic waste stream. Okay, and we have developed a technology whereby we can break down, okay, the plant-based material that we're using into compost within 24 hours. Okay, and just to give you a quick illustration, reaching out to grab some cutleries. If you look at the video here, this is our plant-based material that we can basically mold it into a knife. Okay, 2 mm thick bioplastic, becoming compost in 24 hours. This is unheard of. This is a world-first technology that we don't know any other competitor who is even close to where we are. So back to the slide, please. So this, what you see here, this is a two-part solution. Basically, our material, plant-based, and we are able to accelerate the digestion of this rapidly within a day. And for the compost, we bring it back to the farms. Next page. So as I mentioned before, we can replicate everything that's on the fast food menu today, from cutleries, from trays, from cups, to stirrers, to serviettes. Next page. And just to illustrate the process that you see from the bottom left to the bottom right within 24 hours. And what is the picture that you see on the top right-hand side? This is our demonstration digester. It's a one-time digester that's based in Singapore. So it's a full end-to-end process. Next page. I will skip the video part, but if anyone's interested, I'm happy to send you guys a YouTube link that you can watch it yourself. Next page. So what does this mean, to the fast food, to the McDonald's, to the KFC? So first thing, all right, McDonald's by 2025, they have said that they're committed to either a recycling or a compostable direction. I think that's encouraging. But the truth is, there is no real solution on the market today. If you want to recycle, as I mentioned, recycle costs you too much. Okay, so our solution is actually the cheapest solution that McDonald's can turn to. Okay, we provide the foodware to them and we collect back the waste for digestion. Next page. So just a quick comparison between the so-called state of art when it comes to waste collection. If you look at the left-hand side, unfortunately for most waste today in a modern urban society like Singapore or even Japan, most waste are incinerated. Okay, so there is a new sliver whereby we are trying to recycle. Just for your information, recycling rate in Singapore for plastics is 4%. It is not high. As much effort as we have emphasized, it is still very low because of the need to segregate. So segregation is a big issue. And so what we are saying here is on the third column, right? This is what we think makes sense. This is for organic brown waste. Okay, when I say organic waste stream, so food waste now is a topic that we have been addressing for the last few years. Okay, rightly so, because wet food waste stream doesn't go well with incineration. Because it's wet, it doesn't burn well. So now what we're saying is basically for your foodware, food packaging waste, anything that's been stained with food, it makes natural sense to be clustered together with organic waste stream, and that is what we call a brown waste stream. Next page. So I wouldn't go through too much in detail. Basically, life cycle analysis, right? Basically from factory, beyond just the factory gate, all the way through transportation to collect back, and how the compost is sequestered, right, for new growing of trees and for crops. Next page. Okay, so we are looking for partners, who believe that it is possible to go circular. Okay, so if you are a fast food brand, if you are a food service provider, now we would love to speak to you to say how we can bring this world-first technology to you. Thank you.
Thank you very much for sharing that with us. So we just heard from Tria. All right, we've heard from two startups from around the ASEAN region. It's time now to turn our attention to our next one. For the next 10 minutes, we hand things over to iPrice. All yours.
Hi, my name is David. I'm the co-founder of iPrice. Very, very glad to be here participating on today's conference. iPrice is a company out of Southeast Asia, and I will share in the next 10 minutes what we're doing and why we are excited about doing it here in the region. I will now test whether the clicker works. Yes, it does. Perfect. So the fundament for our business has been that Southeast Asian e-commerce is becoming increasingly competitive market. Global giants like Alibaba, Amazon, Tencent are coming to Southeast Asia, fighting with local champions, often backed by big families of the Southeast Asian countries. And that big fight is creating an enormously great environment for an e-commerce aggregator. And that's what we have been building for the last 6 years. iPrice is a leading e-commerce aggregator, and you can think of it as Danawa, Nuri, or Naver shopping of Southeast Asia. That is also the reason why Naver has invested in our Series A as the largest investor and follow on in the Series B round. We started originally as a latecomer in the game. On this chart, you can see the GMV run rate, which each of the aggregators in Southeast Asia was driving. And as you can see, we currently are 5 times largest than our next best competitor. And this is driven by a combination of very localized approach. We We as founders, we moved to Southeast Asia, we live there, the whole team is in Southeast Asia, but at the same time, combined with the ability to deploy world-class technologies. There's one specific when it comes to e-commerce of Southeast Asia, and that's the fact that the market is extremely messy. On the left side of this chart, I've put together a comparison on how an iPhone 11 search results looks like. And if you go to the Amazon in the US, you get some 70 or above 100, maybe close to 200 search results of iPhone 11. Typically, combination of the various memory sizes and colors and the different variants like Pro and the standard one. If you go to Flipkart in India, it's pretty much the same experience. You get a couple dozens results. If you go to Coupang in Korea, again, very similar experience. If you filter for iPhone 11, you get, I think, 26, which is the exact number of combinations of variants. Now, if you go to one of the marketplaces in Southeast Asia, the experience is very different. You get hundreds of thousands results. Here I am pointing a company called Tokopedia, which is the leading marketplace in Indonesia. You have close to 1 million results, and these are mobile phones, phone cases, cables. It's all messed in one. These are used and new products, refurbished, smuggled from China without warranty. Anything you can imagine is part of that e-commerce experience. And that's where iPrice comes very handy for the users, because it helps them to navigate through the mess. Some of the properties of our aggregated catalog are mentioned on the right side. The one number which I would pinpoint is 6 billion. We have currently 6 billion items in our database. That's how massive the catalog of Southeast Asia became over the years. And that naturally makes it very difficult for users to navigate through. By becoming the leading e-commerce aggregator, we turned profitable. We had EBIT profitability by the end of 2018, but we decided that the opportunity is bigger and raised a Series B round to turn us as iPrice from the largest e-commerce aggregator into an online shopping companion, a place where Southeast Asian shoppers would start their online journey. And we would do it by focusing on 2 dimensions. One, to drive further scale, and the other to deepen the relationship with the users. When it comes to scale, our original strategy was website based, as we saw with many of our role models. We were getting organic traffic from Google, and we're converting this one to happy shoppers. But Southeast Asia is a mobile only market. And as such, people spend, relatively speaking, much less time in browser, and they spend more time in the various apps, or super apps, as it is a fancy term these days. So what we started doing is that we started bringing that e-commerce content we built, that price comparison, product discovery, and started bringing that into those super apps. On the screenshot, you see 2 examples. Let me maybe mention Line, which you might be familiar with, which is the chat app. They have a Line Shopping, and in Indonesia, Line Shopping is fully powered by iPrice. By penetrating those super apps enabled us to see a 2.6x growth year over year in terms of the number of people we get reached to. And we're currently ranging close to 35 million people visiting our platform on a monthly basis, and are having our own iPrice website plus additional 15 partners where we expose iPrice content to. Our pipeline is very strong, and that has been further propelled by COVID-19. Many of the super apps are looking for additional engagement opportunities and online elements where users can spend more time in those apps. So our pipeline has been very strong, and we are very confident it will continue driving further scale by onboarding more partners. When it comes to deepening user relationships, We started as a traditional aggregator, whereby at the end of journey on iPrice, you are redirected to our partner, e-commerce merchant, where you can finalize your purchase. However, in the mobile-only world, what we realize is that the transfer between an app to another app can be quite breaking experience, and users are not preferring that. And as such, what we've developed was a fully integrated solution, and you see screenshot on the slide now, whereby in an app, and here is an example of our partner Home Credit, we provide, as an integrated provider, we provide the e-commerce content, the price comparison, product discovery, but the user can also directly order the product from the app, and in this case, pay with a consumer loan provided by Home Credit. It's a consumer loans provider. And as such, the user is having access to the whole breadth of Southeast Asian e-commerce within his favorite app, and with the ability to finalize the purchase within one environment, and in this case on top, leveraging the services of that company. What's really exciting about those initiatives is that by deepening the user relationship, we're also seeing extension of our margin, because we do control that transaction. And as such, we're seeing a monetization growth of 3 to 5x compared to a traditional path where we redirect the user to one of the marketplaces. So this has been a story of iPrice, a company, an e-commerce aggregator, which became an undisputed leader in its field. But after raising Series B, further investing into generating much more scale and deepening the relationship with its users. We're about to start fundraising next year. So I'll be very happy to get in touch with any of you who might be interested in being part of our journey. So feel free to contact me on those contact details, david@ipricegroup.com. Thank you very much.
Thank you very much. We just heard from iPrice. Again, if you want to find out more about the startups that have been presenting, you can always head to their digital booths. All right, time to give the next 10 minutes to our next startup from the ASEAN region. For this, we welcome InfoFed. It's over to you.
Hi, everyone. I'm Sharanya from InfoFed. At InfoFed, we empower people with our creative technologies. We are the leading esports company in Thailand, aiming to build and cutting-edge online esports arena to connect Southeast Asia gamers under one platform. We have developed the tournament as an academies program for Southeast Asia gamers to realize their full potential and be able to get success recognition. Let's start with our milestones. We start off with establishing our very own arena in the heart of Bangkok City, Thailand Esports Arena. And the success of the arena gained the interest of the company, helping us raise the seed round. We built an ecosystem within Thailand by launching esports tournaments, open up our production service team, and finally launching our very own platform. Major telco company as well as the government has us backing up in our esports ventures. Now we are expand our platform aggressively to Southeast Asia with an aim to build a well-established ecosystem. And we believe that this will give the opportunity to the esports enthusiasts to find the right career path in the industry. Our existing investor now is KK Fund, EventPop, Deeper, DTech, and GameWith. We got a well recognition as an outstanding startup business from the related associations and media partner. Next, please. Our target users, for the target users, Our target user is being a savvy gamers who are passionate about playing games and are actively participating in the tournaments with having their own teams and never shy in buying their ways into the best experience in esports. After an extensive research, we came across the biggest problems facing by everyday gamers in Southeast Asia: inefficiency performance tracking system, language barrier in the regional tournaments, and of course, unclear career path for the esports players to pursue. Here's come our solutions. With our earena.com and online esports arena, we'll be able to tackle all the main problems faced by everyday gamers, and the success recognition esports tournaments programs such as Zero to Hero will kickstart their esports career. For earena.com, since the launch of the platform, we have hosted more than 90 tournaments across Southeast Asia. And with the platform key features, we have designed the best performance tracking system, which allow the users to track their performance by individuals, teams, and tournaments they have been participating, helping them improve and moving forward. We have localized the platform in multiple languages, covering Southeast Asia, so the gamer in the regions can participate and communicate with each other, breaking the language barriers. With our chatbot is there to take the user into the esports journey on the platform, helping them whenever they need. We currently have almost like 50,000 players registered on our platform, and with 80% of them actively participate in an ongoing activities on the platform. Across all tournaments, we have accumulated more than 100 million viewers online across multiple streaming channels. For the Zero to Hero program, as the content model on the platform, Zero to Hero program is the esports tournament platform that uniquely developed to enable the gamers to start their esports career, realize their full potential, and level up along the way to reach the top. Which we start from level 1, we create a community tournaments as an academy background for Southeast Asia gamers to practice their skill and to get the opportunity to pursue for the further level in esports. Then the next level would be the national league, which we will bring the talent from the academy to get the chance to compete in the national level to get the success recognition. And at the end, for level 3, we bring the best to the top of Southeast Asia for the regional cup. With the technologies of virtual studio, our plug-and-play virtual studio and in-house production team are one of the key competitive advantage for scaling our online esports tournament within the regions. Esports has growing rapidly across the world, where Southeast Asia is being the fastest growing market in the world with a revenue of 4.4 billion in 2019 and continue moving forward in the coming years, especially on the mobile gaming. By having our own arenas for online and offline, we'll equip studios and running various academy programs with many communities, making us as a one-stop esports solutions provider, giving us a competitive edge within the regions. We have been working with various partners in the esports ecosystem who involve, in all part of the ecosystem over the past year, including the game publishers, brands, government agency, and events organizations, or the streaming channels would make us have a strong relationship with them. About the team, for the revenue model, our current revenue model is based on B2B, which is the next stage. We will add B2C once our subscription model is implemented from Zero to Hero program. Team, we believe in teamwork, of course. Our management team is very dynamic in terms of background experience. Founder is recognized as a pioneer in esports industry in Thailand. Management team has varied business expertise, and being an esports insider, our CMO started her career at C Thailand, business development team leader is even be a professional players for more than 10 years. For the plans that we have achieved target revenue, of course, in 2019 and it's coming 2020s, and target to grow in the coming years. Now we are seeking for the Series A funding for $3 million USD. Of course, with the objective is to grow community through our platform by adding more tournaments to attract the savvy gamers. Next is to scale earena.com and Zero to Hero program to Southeast Asia countries. We are having a strong position in Thailand, of course, and scale business to Myanmar already in this years. We target to continue growing in other countries in the coming years. And of course, the last is to develop the advanced technology in order to enhance our user experience and platform functions. Well, we have a passion in what we do and where we want to be. We unforfeit. We empower people with the creative technology. Thank you.
Thank you so much. We just heard from InfoFed talking about esports. How about that? All right, one more startup pitch for this segment. And for the next 10 minutes, we hand the floor over to Pixibo.
Hi there, good afternoon. My name is Rohit Kumar. I'm the CEO and co-founder of Pixibo. We are a fashion tech company solving for the return rate problem in online fashion. All right, I'm going to see if this clicker works. Okay, so here we have the return rate of the 3 largest online fashion companies in the world. So you'll see between them, they have $5 billion of returned inventory. So that's just 3 companies, 1 year. That should give you a sense of the scale of the problem that returns represents in online fashion. Now, typically online fashion retailers have adopted a very formulaic approach towards handling returns. So think about it from a shopper or a consumer perspective. When you buy something online and you change your mind, and you request for a return, that triggers a whole series of events, which results in the product making its way all the way back towards in the logistics chain, all the way back to the warehouse, and then it gets listed again on the website. But actually, sometimes if you think about it in fast fashion, when margins are really small, you actually have scenarios where a retailer is spending probably 4 or 5 times more than it costs them simply to take the product back. So what we also have is the fashion industry has evolved a fair bit, and now we have different types of operators. We have different business models. We have discount retailers, wholesalers, pre-owned marketplaces, C2C marketplaces. So the question we are asking is, what if returned inventory could actually move forward in the value chain and could become a source of supply for some of these alternative players in the fashion industry? So the idea is to use data and technology to move returned inventory forward to the next best channel. Is that even worth doing? How big is the opportunity? Turns out it's a pretty massive market. So the size of the online apparel and footwear market globally is about $250 billion. Assuming a 20% return rate, which is pretty conservative, you have about $50 billion worth of product that's sort of circulating in terms of returns. So there is potential for a returns management platform to pretty much extract $250 million, about $250 million a year in fees. And that's a category that hasn't been created. That's a category that no one is looking at. So really what we want to show retailers is a path to zero return. So take on this problem and show them there's a way to solve this. And we do that in stages. I think of the story of Pixibo in chapters as well. And so the first chapter for us was and A is all about preventing returns in online fashion at the point of purchase. We do that with Find Your Fit, which is our flagship product. I'll talk more about that in a second. The second chapter is about optimizing the return process by launching an experience store for online fashion, what we're calling the Pixibo Fit Center. And finally, with Pixibo Returns Management, rerouting returned inventory to alternative sources of demand. So let's talk about Find Your Fit. So if you've shopped online for clothes, you'll probably be very familiar with this problem. The fashion industry is one of the few industries where there is no standardization. So especially in size, there is no standardization. A kilometer is a kilometer everywhere, but a size 12 in one brand would be completely different from a size 12 in another brand. We make that problem go away. So that's what Find Your Fit does. We take the static size chart, which is pretty much not changed in more than a decade, and we transform that into actionable size advice that's personalized for every shopper and for every single product that they look at. Now, Find Your Fit moves the needle on pretty much all of the metrics that an e-commerce retailer cares about. So typically, we reduce return rates by 7 to 11%. We increase conversion rates just because shoppers have a lot more confidence when you tell them their size, but between 35 to 75%. We increase the average order value. Shoppers who use Pixibo tend to buy more. And we reduce size sampling, which is the incidence of buying multiple sizes of the same product. We are the market leader here in Asia. We work with pretty much all of the large online fashion brands. So that includes players like Lauria in Singapore and Southeast Asia, MAP in Indonesia, Fashion Valley in Malaysia, Shinsegae in Korea, and quite a few in Europe as well. So the second step in our journey, and this is something that is literally launching in a few weeks, is the launch of what we call the Pixibo Fit Center, which is an experience store for online fashion. So this is us actually venturing out into the real world and using physical spaces, but custom-built physical spaces for online fashion. So what is a Pixibo Fit Center? It's a space where shoppers will be able to pick up their online fashion purchases, try on the items, and pay only for the items they want to keep. We handle all of the returns. So the idea is to combine the pickup, try on, and return process into one single transaction. Why Pixibo Fit Center? And from a shopper perspective, if you ask them, hey, listen, what do you not like about online fashion? You'll hear consumers tell you about the inefficient 3-step process, the fact that I have to buy something, get it delivered, try it on, and then request a return. The hassle of returns management, having to book a return and then request for the return and verify if that happens. So actually, by combining all of that, it really elevates the experience for shoppers. On the retail side, what happens, consumers don't see this, but the moment you decide you don't want a product, that is a product that remains out of circulation for the retailer for about 30 days. So between the shopper saying, hey, I want to return this product, and it actually coming back into circulation and being listed, it can sometimes take about 30 to 35 days. We can reduce that by about 70% by making that decision instant via our experience centers. So the way this would work is with the launch of a service called Try Before You Buy. And you as a shopper, you would browse across your favorite online fashion websites as you normally would, and you'd see on the product page eligible for Try Before You Buy. Try Before You Buy is exactly what it says on the tin. You select the products you want, you send it to our Fit Center, which is the first one is going to be in Somerset in the Centrepoint Mall in Singapore, where you try them on and you only pay for the items after you know it fits you and after you know that you want it. There'll be different types of fit centers. So the fit center that we're launching is what we call an experience fit center. So this is an O&O fit center, completely owned and operated by us. In the future, we expect there to be different types of fit centers. So we would have partner fit centers, and we would also have fully automated self-service fit kiosks as well. So yeah, once again, what we're really trying to do here is build the technology stack for the full spectrum of the return rate problem in online fashion. So again, reduce returns at the point of purchase in online fashion using Find Your Fit, our AI-powered size recommendation platform. Optimize returns using our network of fit centers, the experience store for online fashion, which combines the pickup, try on, and return process into one experience. And finally, resell returned inventory and move it forward in the value chain by leveraging alternative sources of demand. So yeah, it's a big mission. It's a big problem. We're always looking for partners to join us on this journey. If this sounds interesting, and if you want to know more than this 600-second pitch, drop me an email, rohit@pixibo.com, and I'll be more than happy to chat. Thank you so much for listening.
And thank you very much for your pitch. We heard from 5 startups, the likes of Proxima, Tria, iPrice, InfoFit, as well as Pixibo. We're going to take a break. Our next session starts at 2:50 p.m. Singapore time. What you can look forward to is a lecture on growth from a startup to unicorn. We also have another panel discussion that will discuss cross-border investments, plus one final round of pitching. We're back at the ASEAN-Korea Global VC Conference. It's back at 2:50 p.m. Singapore time. Good afternoon and welcome back to the ASEAN-Korea Global VC Conference. I'm Elliot Danker, your host and moderator. We still got quite a number of segments to get through and some very interesting ones as well. Up next is a very distinguished speaker. He is Mr. Jong Yoon Kim. Now, Mr. Kim is the CEO of Online Business and Corporate Strategy at Yanolja. Now, as you may know, they are one of the unicorn companies in Korea that has grown tremendously for years, and they try to achieve their vision, which is empowering people to better enjoy life through their services. But how have they been able to do that? Well, we'll find out that and a whole lot more, including stories of growth to a unicorn company. Ladies and gentlemen, please welcome Mr. Kim. Mr. Kim?
Hi, this is Jong Yoon. Thank you for introducing me. First of all, I am very happy to share our lessons about how to be the unicorn company for the last few years. At the same time, I'd like to share what is the digital transformation, which is the key to be the unicorn company, especially in the era of the post-COVID-19. So today, I'd like to share 3 agendas. First, the new trends in a view of post-COVID-19 era. Second, what's the digital transformation and why this is very important to change the world and innovate the existing industries and to be the unicorn company. Last one is about the examples. So in Korea and the other countries, Yanolja tried to digitize the industry itself to be digitized. So I would like to share the examples in the industry of travel and hospitality. 3 trends, I think, in the post-COVID-19 era. First is about the local content. So you may heard about the text or the pictures or video clips explaining local content or local sites looks like the other country's site. In Korea, sometimes I saw the picture with the text that this looks like Paris or this looks like New York. But as you may know, you cannot travel outside Korea. So everyone, the local contents as the other country's content, which means that there is a reinterpretation of local travel destinations and content. So like this, before the COVID-19, small portion of the content were made with the better types and with the complicated or detailed information, which is the valid. And there's a value to use and to monetize the content. But recently, every content should be moved like that. We are making all the content to be monetized, not only about the global overseas travel, but also the local travel. So I believe most of the contents and information are made better than the before the COVID-19. And probably this content may be most important also for the many startups to monetize and to digitize their overall the process and the product in a better way. Second trend is about the cost and price. The price for the travel has been increasing due to the new regulations for health and hygiene. At the same time, demand has been decreasing. So many companies delayed spending for the additional supply. You can imagine that any airline company may not order the new airplanes because they are not sure that when the demand will come back. So this type of the mismatch between demand and supply make the price of travel increase after COVID-19. So many startups should be ready to be differentiated to lower the cost. And if they can offer the lower price, then probably it's very important to win over the existing competitors. So I think this is another important factor to use the digital technologies. Last trend is about the contactless service. In Korea, we are calling this service as untact. Actually, this contactless service trend was ongoing before the COVID-19. But COVID-19 is accelerating the adoption rate of the untagged service, contactless service. And to realize this contactless service in a lower cost, in a better price, cloud service is required. That's the reason why SaaS is the key word recently, and every SaaS company is digitizing many industries in the same way. With the cloud service, with the SaaS, the other digital technologies as the blockchain and Internet of Things should be used at the same time. Blockchain technology can be used to make the data flow in a frictionless way, seamlessly. Also, Internet of Things minimize the manual process between human and machine or machine and machine. So this technology can be very helpful to maximize the contactless service adoption rate. At the same time, this is connected with the first and second trend, as I mentioned. In a summary, there are three key trends in the post-COVID-19 era. First, content is the key. Second, differentiation to lower the cost will be the key factor to win over the existing competitors. This is a great opportunity for the startups, I think, because without the digital technologies, it's impossible to lower the cost and to win over the existing competitors. And I believe startup is better to understand how to use the digital technologies better than the existing incumbent players. Last piece is about the contactless service. Due to the COVID-19, everybody understand why contactless service is very important. Delivery, mobility, and many new experiences and services are about this contactless service. And to realize this service, we should understand how to use the cloud, blockchain, IoT, and the other digital technologies. So these types of the new trends should be connected with the digital transformation. So I would like to what this digital transformation means and why we should understand this technology to change the world and to be the successful company in the post-COVID-19 era. I would like to explain with this example. In the travel industry, working hours is very important because as the working hours has been decreasing, the leisure hours will be increasing. And if the customer should spend more hours besides the working, definitely the total addressable market of travel and leisure will increase a lot. More important thing is that increasing spending for leisure is the faster, higher increase rate compared to the leisure hours. Leisure hours has been decreasing by 27% for the last 30 years. And I think this kind of the trend of Korea is very similar for most of the countries. But in terms of the spending for leisure, for the last 10 years, spending for leisure has been increasing by 60%. So everybody are spending more hours and more money for their leisure. However, but customers are not that satisfied with their leisure because they don't have money or they don't have time enough for the leisure. I think this kind of the dilemma between the reality and idea is the key. And every startups should address this dilemma using the digital technologies. As I told you, in a reality, leisure hours and spending has been increasing. But customers are not satisfied with their leisure due to lack of leisure hours and economic burden. So under the existing technologies, this kind of the dilemma cannot be resolved in every industry. But using the new technologies, the digital technologies, any company can add additional value. And if they can change the value chain in the industry, probably this dilemma can be resolved. And I think the new startups try to address this dilemma in many countries. Uber, DoorDash, and Airbnb, and Yanorja are the companies solving these dilemma issues. With the existing technology, there is no added value. That's the reason why existing incumbent player cannot resolve this dilemma. But new startups, new IT giants are creating the added value to solve this dilemma. So if you can find out any dilemma in every industry, and you can think about the new digital technologies or new business model to create the added value to solve this dilemma, then you can be the unicorn company in a specific countries or in a specific continent or in the global market. So I would like to introduce the hotel example. Between the hotel and guest, there are 6 steps across the value chain. And this value chain is totally segmented into many pieces. So the data do not flow in a frictionless way. So to make the data flow, huge cost or many manual processes should be added. That's the reason why the process is inefficient and there is no added value. Also, around the hotel or around the guest, there are many touch points. For example, if you may book the hotel room with the breakfast, probably you may go to the restaurant in the morning and you may check your room number or your name in front of the restaurant, and the servicemen in front of the restaurant are checking your name or your room with some paper. We can think about this process from the hotel's point of view. Every night, the servicemen should summarize who made the room with the breakfast, and they may print the Excel file, and they should go to the restaurant and checking which guest really come to the office, the restaurant, and after checking the guest status for the restaurant, and they should go back to the hotel front to input the data manually. So the process are very complicated and inefficient because there are disconnects between online and offline of the current value chain and touch point around the hotel or guest. So to address these issues, we can connect all the points like this. So many financial institutions or public organizations are integrating full system through the existing technology. But this is the process resulting in the very high cost. That's the reason why some of the financial institution or the public organization are doing this integration, but usually the other small company or private companies cannot connect all the points like this. It's the old concept. It's the old style. But if we can use the digital technology to connect all the dots, the value chain and touch points, then we can minimize the cost to make the data flow in very efficient way without any friction. This is what Yanulja has been doing. Yanulja has developed the global data platform in the hospitality industry across the value chain. So between the hotel and customer, we try to make the data flow without any friction. That's the reason we have developed each business model in each step across the value chain. From the hotel side, Yanulja tried to realize the brand hotel business model, and we can be the local #1 in this business area. Also, we have been expanding our brand hotel business into Southeast Asia and Europe. From the customer's point of view, booking platform is one of the channels. Customer book their reservation for the hotel. So Yanulja tried to be a local #1 OTA in Korea. At the same time, we have been partnering with every global OTAs to make the data from customer to hotel side. Last piece about the center, the management solution. This solution is based on the SaaS. In this area, Yanulja is global #1 cloud-based hotel management system provider. Up to now, for the last 6 years, Yanulja has been expanding our SaaS into 160 countries in the world. The reason I'm explaining what Yanulja has been developing is that it's not only about the making money in a specific step. It's about the digital transformation, and it's about how to make the data flow from the customer to the provider without any friction. And if we can realize this global data platform, then we can innovate the existing industry's dilemma, and we can introduce many very interesting content-rich service to the customer and hotel. And we can provide huge benefit for the hotel to lower their operational cost. For the customer, the better customer's experience. And also, in terms of the environmental issues, we can save the cost for the many papers, waste of the energy, and waste of the additional cost with the negative impact on the environment as well. So this is very important to be the global player for the specific industry. And this type of the digital transformation can be monetized recently better than the before, because as I told you, the new three trends are tightly connected with this type of the change in every industry as well. Last agenda is about the real cases. I would like to show the video clip first for your better understanding.
Introducing Yanolja Y Flux. Are you fed up with the time waiting after you arrived at the destination early? With Y Flux, you can expect sooner check-ins. If the room is prepared in advance, you can make an early check-in regardless of the time scheduled for check-in. Complete the check-in process quick and easy. Y Flux does not need a card key. Upon completion of a check-in, a smart key is issued via message. There's no worries in losing a physical key card or any errors. Room equipment and services you need can be selected during reservation. Additional items needed during your stay can be easily purchased from the Y Flux vending machine. Set the floor you wish to go to with the elevator on your smartphone, and the elevator will be waiting for you with its doors open. Once you're in your room, even if you don't place the key card, and even if you fail to find the light switch, the room will automatically begin to control the room according to your presence with a welcoming sound. If you feel too lazy to go out, you can order breakfast through room service in your bed. Aren't you curious about the taste of food delivered by a robot? Enjoy the checkout made with a single click without visiting the front at the time you want. Y Flux.
You may have heard about the ADAS, Advanced Driver Assistance System. To realize the ADAS, there are 5 levels, and every level should be used with the digital technology to realize. So in terms of the hospitality industry and the other industries, I think there may be the levels to be realized step by step. Level 0 is about the integration for the frictionless data flow, as I explained before. And level 1 is the step to automate the lobby automation, lobby the process and operation, like, for example, the check-in and check-out process. Level 2 is about the in-room service automation. You would like to order your room service using the robot, for example, or you would like to check the current status of your order using the mobile phone, or you would like to change the light or air conditioner or TV using the mobile or AI speaker. This is about the in-room service automation. And if we can collect all the data without any data issues or privacy issues, then probably you can use this data to provide customized offer for the customers. That's the level 3 about the personalization. I would like to explain each level, how Yanolja has been realizing, and please think about what kind of the structure and architecture in your industry to realize step by step. The first one is about the data flow without any friction. I think blockchain is one of the digital technologies to be used for this level. Yanuja developed blockchain-based token, and using this token, customer can use the service across the every various platforms, which improves the traveler's experience, I believe. Yanuja provides many travel-related categories and services, but we cannot cover everything. So to co-work with the other partner platforms to maximize the customer satisfaction, blockchain is quite useful to connect the data between the different platforms in a very low cost. Level 1 is about the lobby. Probably for the check-in, identification is very important. Imagine the process you have been experiencing in front of the lobby. You should show your passport, and the front should copy your passport, and they should send the copy to the other public organization using the fax. Copy and fax are the least safe the process and channel in terms of the security. Also, you should write down some signature or name and numbers on the printed page. Also, you should let the front have your credit card data. So these types of the process are not that safe. So decentralized identifiers is the key technology to innovate this unsafe process and innovate to protect privacy in lobby. So I would like to show the video clip about the real cases Yanuja made in Korea.
Don't need to be at the front for 24 hours for an average accumulation of customer engagement less than 1 hour. Work busy with various processes of checking customers during check-in time is now gone. It is because YFlux Kiosk takes care of the 4 stages of reservation: voucher check, passport or ID check, document work, and card key issuing. And facial mapping through surveillance camera allows the customer to go through quick check-in, which only takes 5 seconds. And the employee can monitor the process at the back office rather than at their lobby front.
With these technologies, customer may be very happy because better experience and safer the process. Also, the hotel can minimize the privacy issue and maximize the usefulness of their operation, finally resulting in the lower cost. And level 2 is about the in-room automation. Internet of Things technology in the cloud can enhance the integrated control and interactive communication between the guest and the hotel's touch points, including air conditioner, furniture, and TV, and with the lobby for the room service and everything. So Yanoda launched the YFlux application to realize these new services for the customer and for the hotel. I would like to show the video clip about this.
Use of card keys which require high maintenance costs and receive lots of customer complaints is no longer necessary. Guests can select services they want at a reserved time, and additional items needed during the stay can be purchased at any time without the need for help from a staff. The room control system of YFlux detects issues that can occur in rooms in real time to minimize customer complaints. Minimizes the need for unnecessary face-to-face service support by a staff and can minimize customer complaint.
So no more paper, no more waste of the energy, no more the physical card key, and only mobile. I think this is very necessary process in the post-COVID-19 era in every industry, especially in the hospitality industry. So today, I shared how the industry will be changed, which is called as the digital transformation. And from the startup's point of view, to be the unicorn company, startup should win over the incumbent player. Good thing is that with the existing technologies, incumbent player cannot resolve the issue, the dilemma between the reality and the idea. So with the new digital technologies, startup introduce new services to create the new added value, which is the major differentiation from incumbent player, and it's the momentum to change and to innovate the existing industry. And actually, the COVID-19 is accelerating the speed of the change, like a digital transformation in the world. I hope my lecture can be helpful to understand what's the digital transformation and why this is the key value to be the unicorn company for the startups. Thank you for your time, and thank you for inviting me to the great opportunity. Thank you very much.
Thank you again. We just heard the thoughts of Mr. Jong Yoon Kim, who's the CEO of Online Business and Corporate Strategy at Yanolja. All right, it's time to move on to our final panel discussion. Once again, welcome to the ASEAN-Korea Global VC Conference. Our next discussion is about cross-border investments. And on the panel, we have Charles Rim, the general partner at Access Ventures, Sang Han, the partner at Central Ventures, as well as Eric Yu, the managing director at KB Investment. Now, Charles, of course, leads the Hong Kong-based VC firm Access Ventures, making cross-border investment between Southeast Asia and Korea. Sang, who who's joining me in the Singapore studio is working at Centro Ventures. It's a Singapore-based VC implementing regional investment, and of course, they're eyeing expanding into Korea. And Eric finally is in charge of Southeast Asia investment at Korean VC House, working closely with Indonesian player MDI Ventures. Gentlemen, thank you very much for joining me today in this panel discussion. Of course, we're doing a remote version. This is the new world, this hybrid, right? I suppose let's start off by getting a brief introduction about yourself and the company that you work for. Can I start with Charles, please?
Hi, thank you very much for having me. Very happy to be here. We started Access Ventures with my partner, John, about 4 years ago, which was in 2017 in Fund 1. And last year, we did launch our second fund. I'm based in Seoul, but obviously spend a lot of my time down in Southeast Asia. Our core markets that we invest in are Indonesia, Vietnam, with a number of Singaporean investments as well, operating in those markets. A third of our portfolio are Korean companies, many of which are regional global businesses and with an operational focus in Southeast Asia. So to create a bridge between both markets is one of our strategies.
Sang, of course, you're in the Singapore studio with me. Tell us a bit about yourself and your company.
Thank you very much. My name is Sang. I'm a partner with Centro, an early-stage venture capital firm based in Singapore. We like to invest in startups that have some proof points led by ambitious founders that are operating in sectors that are ready for digitalization. And I think based out of Singapore, we've been able to cover most of Southeast Asia. Back over to you.
All right, thanks a lot, Sang. And finally, Eric, tell us about yourself and your company.
Yeah, thank you for inviting, and I'm honored to be here. So we set up the fund here in year 2019. It's a very unique structures we have because we have a joint venturing with the MDI Ventures. So MDI is a corporate-backed CVC by Telkom Indonesia. So the basic concept was we're building the business for the digitization something in Southeast Asia. And then we also aggressively back up the startups by our business assets, not only from the Telkom Indonesia, but also our heavy holdings. And so this kind of corporate-backed VC, we're now kind of test about how can we support and then providing our capital service to startup is a current situation.
All right, thank you very much, gentlemen. Now we have a better understanding of what we're about to get into, which is cross-border investment. But really all of this is on the back of the COVID-19 pandemic and crisis that we're sort of going through, right? And you realize through the course of the year 2020 that no one is alone. No one's an island. No country or startup or business can deal with it alone, which is why it's so important to build that close relationship beyond borders in that sense. So I want to start off with a very common question. I mean, we see how ASEAN has been making various partnerships. Even the EU is interested and whatnot. But I'm curious about the relationship between ASEAN and Korea. And Eric, I was hoping you could help me out with this first question. Why is it ASEAN and Korea need each other? Could you share with us your view on each region and their specific needs and how that can be addressed with capital investment?
Oh, yes. So fundamentally, when we set up the funds, or before the funds, I'm starting to invest into Southeast Asia since the year 2013 or 15. The original idea was the potential market up there, because the digitalization around the world, and of course a lot of the country has the same situation. Southeast Asia has a lot of a potential market there in terms of the population, GDP growth, etc. And also there was the huge demands for digitalization because of there is no legacy such as China, and also Southeast Asia can learning something from the Chinese case. And then also at the time, the Southeast Asia always welcoming to foreign investors. And then from my Korean investors' perspective, of course the market up there, but One more thing is market side here and the capital side here. So in case of the capital market, okay, let's focus on the VC. So at the year during the year 2015 to 17, 18, a lot of the VC markets they're growing very fast, and then new VC funds come into the market, and the capital size grows to 1 billion to 5 billion. So in the sense, if we making some profit by the capital, it's really hard to get some high upside from the only investment in Korea. We need to have some other schemes to deploy the capital to the foreign country. And of course, China is very competitive, and the US is far away. India is new coming up. And Southeast Asia is quite a suitable market because in terms of capital, we are ready on to the deploy, but also from the Korean startups and Korean typical giant company is always keep to looking at Southeast Asia as a second foreign market beyond China. So strategically, we're looking at the market potential and capital deployment and business demands all together put together. Is a kind of that's a kind of suitable market for me to looking at Southeast Asia.
Thanks a lot for that, Eric. It's like don't put all your eggs in one basket, Sang. You're here in Singapore. Why is it, and the same question for you as well, I mean, why does the ASEAN and Korean basket look so exciting?
Sure. First off, wonderful comments from Eric. If I can offer some comments from my perspective of having lived here in Singapore for over 12 years and also being a Korean, maybe I want to start with something that is a bit of a high-level view. Korea has managed to develop and advance to a kind of a level in economic growth where there's a lot of accumulated technology and services know-how and expertise. If you look at Southeast Asia, on the other hand, although I don't want to generalize, you have a number of countries that have the massive potential to grow with a lot of unmet needs that require these tools of technology and services know-how that are waiting to be unlocked. And I think if you combine Korean services and know-how with capital, and I'll elaborate on that from a VC perspective a bit later, what you have is this tool that is very uniquely suited for Southeast Asia to help some of these countries, some of these industries and companies achieve the kind of scale that allows them to maybe get closer to a form or a size or a company style or pattern that would be, I would say, ideal, and I would maybe classify that as being a bit like a unicorn. But I digress. So the combination of this sort of bidirectional flow, know-how and capital, that is finding its way from Korea into Southeast Asia and a massive market that has a lot of unmet needs is basically a very tantalizing proposition. And I'm just going to leave it there at a high level.
Yeah, there's also the very invisible thing that we don't see in the fact that culturally it's very easy to accept one another in this part of the world, so it does make things moving forward a lot easier in that sense. And I say it's more of an underlying invisible thing. Charles, I'd like to pose the same question to you, if I may. Why is it Korea and ASEAN? Why do we need each other? What can we gain out of each other?
Maybe I should start with some historical perspective. If you look, Korea has always been the number 1 or 2 FDI, foreign direct investor, in the markets that I'm active in, Vietnam and Indonesia. Indonesia forever. If you look at Vietnam today, they say that anywhere from 40 to 50% of GDP is generated by Korean companies such as Samsung, right? And Indonesia, I lived in Indonesia in the mid-90s. I was an IPO banker at the time, and there are significant amounts of Korean companies. The first wave were manufacturers, then hardware, and now we're seeing software. So there's that historical background that's there. The Koreans have done a lot of business in those markets. So I think that wave is just extending with digital, the digital market as well. I think Eric and Sango made great points about capital flow. There's a lot of capital in Korea to be invested in those markets as they look for more growth opportunities. So I think there's a lot to learn, a lot to benefit from Korean capital going down to those markets. And again, the growth opportunities in Korea are getting more limited. So, I think we're also seeing strong Korean entrepreneurs going after those markets. And, one of our latest investments is a Korean team, Korean company, but their core business is in Indonesia.
Yeah, Charles, you kind of help set up the next issue you want to do it. Looking at opportunities is one thing, but seeing other people's problems also does present an opportunity, and that's what we tend to do. We see an area with a problem, we feel we have a solution, and that's the opportunity. Now, if you're in the venture capital world, I assume you come up with a solution through investment. So in that sense, Charles, I'd like to start with you. I'm quite curious, in your experience, in your travels, what are some of the problems you found, and how have you found that, helping solve these problems through investment and activities, how far has that gone? Do you have any stories that you could share with us?
Sure. I think obviously to fuel startups, capital is a very important requirement, but more important than capital is actually strategy and experience. So, one of the things that really benefits Silicon Valley is the tiers of experienced entrepreneurs who play a role as mentors to the next generation. And we see that play out in Korea, where, the first unicorns were established a decade ago or more. I think Southeast Asia doesn't have that benefit, right? We are now starting to see unicorns, but it's the same generation. So having more mentors as well as capital, people with experience to come down to the market and provide that support. As you probably know, in the startup environment, those things are very critical, right? Startup founders rarely can do everything themselves. So more than the capital, it's really the resources they can bring to bear from bringing in investors with that experience and that network to be able to connect them to whether it's partnerships, helping them in terms of recruiting, or helping them with insights in terms of what is short. And one of the key areas is technical capabilities, right? The engineer shortage is acute everywhere, but no more acute than in Southeast Asia. So I think that's a very important one.
I want to pick up on that point for you, Sang, talking about talent shortage in that sense. I mean, we've had discussions for the longest time, Industry 4.0, talent shortage in the tech sector. And, on the topic of solving problems through investment, investment is also a way of bringing in expertise to help spread the knowledge in that sense. What are your thoughts on solving problems through investment?
Well, as a VC, I think the sort of the tool that I have imagining being a hammer that I can bring to bear is probably trying to invest into startups that immediately address that talent gap. And I think the knee-jerk reaction is to go after educational technology companies, which I think in certain markets such as Korea and China have more or less been played out with varying degrees of successful outcomes. For Southeast Asia, I think the notion of what an educational technology investment thesis represents is slightly different, and that would play out in ways where, as a VC, we would try to solve that same question going after a different set of companies in a different industry. And what I mean by that is, imagine that you're a parent in a Southeast Asian household trying to look out for their kids. If I were a Korean family, the first impression I'd have of trying to support the kids would be to try to back and support as much of some kind of an educational tuition effort as possible, right? I think in Southeast Asia, rather than going for something that is so long-term minded, it is probably a lot more efficient and also makes sense in terms of helping out the household directly by going after something that is a bit like a job tech play. So I think one insight that we're still trying to develop is that maybe in Southeast Asia, instead of going after an educational tech VC investment thesis, it makes maybe more sense to try to focus on the earlier stage job tech opportunities that are springing up. And we're sort of covering both white collar as well as the traditional blue collar, but I think that kind of distinction may not necessarily apply.
Okay, but very relevant in the sense that people are losing jobs and having to pivot in that sense. Eric, I want to turn the attention to you. The two gentlemen have shared their experience. For you, talking about using investment to solve problems, what's your methodology? What would you share with us?
So many cases from the Korea and Southeast Asia might be something different. It's a definition of solving the problem by the investment. So mostly in case of the Korea, VCs, it's more, we call it the patient capital, and that we are supportive to the founders to set up a business. And something like in case of the Korea, I see the many cases that I can call it the more chairman-driven cultures. So we are much more depends on the capability of the founders or chairmen, which means that they set up the business, and that we much more be a supportive to the founders, but not to be a more than that kind of the rights. I mean, supportive but not so aggressive. Case of the Korea, of course, this depends on which kind of the VCs and strategy they have. But the Southeast Asian case, a little bit different. It's more board members driven cultures, which means the founders are also very important, and their capability and business asset is set up by the founders, but also the board members consistently input them, kind of give them many inputs about the business. So from my case, capital side and board member driven business, I have the two functions on there. First is capital with some many knowledge and positioning from the strategic settings. So which means that because of the Southeast Asia, there is no legacy. So huge potential up there, but kind of complexity and volatility also together. So it's very important to set up how the corporate need to be, or what is a strategic position should be. But sometimes founders are too much dedicated to one thing, that operations, focus on so much, so which means that sometimes they can lose the directions, not lose, but we can see the many directions, but founders sometimes can losing the right directions or some wrong directions. So at the times of those board members, the assets, knowledge, capital to set up the optimal actions is one thing. And another thing is this is more things I think. So the information gap here. Is information gap between startups, corporation, and investors. But investors always looking at some speaking of the founders or very particular information we can get. So sometimes we cannot share the completely about the corporation's information. Another thing is also the market information. So founders too much dedicated into the operation, then sometimes they losing the information of the market. So we're trying to narrow down the gap, these two dimensions, which means always investors, capital side, dedicate to know about the corporation clearly, and then always input to something strategy on what about the market. And at the same time, we always trying to give us some market information, such as a competitive landscape or new trends. So sort of big events to get impact on the corporation's strategy is a kind of that is a kind of service from the capital side, I think. So those two things can combination together, and we believe that founders, capital, those two combination can solving the problem very well in the market.
It's definitely a little bit more than just pumping in money into the situation. The VCs really offering that expertise and helping to gain focus. Eric, Sang rather, I want to throw this next question to you, because what Eric was talking about earlier on is really between the VC and the startup or the company. If I were to zoom out, and this is a bit of a two-part question, if I were to zoom out, normally when you enter another country, there's bound to be one or two barriers. It happens. In your experience, what do you think has been the hardest barrier to overcome? And what would you say, or what would you suggest, in your opinion, that governments can do to improve cross-border investments? What are your hopes in that sense?
Well, and I thought I'd be getting the easy ones, right? So I think as a VC, if I want to keep it a bit more tactical, then the typical challenges for entering into a new country where we haven't done any transactions before can be broken down into roughly, I think, two buckets. The first one would be deal flow access. The second one would be execution or transaction execution. I think the second part, more or less, is a problem you can solve commensurate with how much money you can throw at it, depending on how expensive your lawyers are. There's some risk management that we'll have to follow after the deal has been done. It's probably the first bucket that is more meaningful, and I think Korean investors, both GPs and LPs, that seek to have some visibility into what's going on in Southeast Asia, I think are trying very hard to make sure that that first bucket is very well addressed. I see very obvious, or at least at the same time, very reasonable and rational strategies of certain limited partners working with very local teams, very early stage, where if they put in money as a limited partner, they get access into pre-seed or even seed stage deals, and that itself will result in some form of targetable Series A opportunities and beyond thereafter. For GPs, I think there's always the desire to be able to do this in-house. And it does make sense, but it's also quite challenging for, let's say, a non-local VC firm. And I'm referring mainly to Korean firms trying to establish some form of local presence. And I think having a local presence is much better than having none. But at the same time, there are cases of certain fund managers being able to overcome that deal flow access challenge relatively in the early stages, mainly because of the way that some of the deal flow kind of finds its way to the right investors. And I'll just leave it at that.
All right, Sam, very nicely handled. Thank you very much. We appreciate that. Charles, same question for you. For you personally, what have you seen has been the hardest barrier when it comes to entering new markets? And in your opinion or your hope, what do you think countries can do to help encourage cross-border investments?
As I mentioned, in the 90s, I used to be an IPO banker in Indonesia. And getting IPOs listed through Bapepam was very difficult. It was opaque. The regulations were not that clear. And so it was very difficult. And my experience with my VC fund in the last 5 years has been very, very good. So Indonesia has done so much to improve itself in terms of its transparency, getting approvals done. You can be relatively sure about the time that's required to process that. And I think Vietnam in the last 5 years has done a lot to improve, but has more to improve, right? And you see the advent of many investors requiring companies to flip, which means to create Singapore entities in order to invest. And all that is because of the difficulties of regulatory approvals and getting investments in and out of the country. So I don't think that's a good thing. I think with more ease of regulatory approvals, then we won't see that requirement anymore. So that needs to improve. The other thing is obviously foreign limitations, right? In various industries, there are limitations of foreign ownership, which creates barriers. Now that takes time because, we had it in Korea too. 25 years ago, many industries were protected with foreign limitations. Those have all gone away. So I expect that's a matter of time, but when that does, that will make it easier too.
Thank you very much, Charles. I really like the Vietnam example. It is something we're all paying attention to. Eric, your turn. Same question, really talking about some of the barriers you think are problems in terms of entering new markets and what you hope that governments could perhaps do to encourage cross-border investments.
Thanks for my situation. I'm already a beneficiary from the government-backed support because we working together with a state-owned company, and then also the KB Holdings itself was used to a state-owned. So we are pretty much, I think that we are we assume that we're familiar with the government side. However, for the investment, maybe there are 2 to 3 things to need here. First, of course, already the 2 persons mentioned about regulation. So market side of regulation first, and the capital side, and the investment activity. Those 3 things is always always want to say something about to the regulation of policymakers. So in terms of the market side, of course, the regulation is the first priority. But thank you for the situation. Many Southeast Asian case now we are not limited about foreign investment. Of course, sometimes in Vietnam or Malaysia, we need to prove a lot of process to invest into the particular domains such as retail or medical things, or sometimes a particular certain industry they have a limitation to about 30% of the foreign investors, or huge a lot of documentation to improve who we are and the KYC and what kind of our money is. But I believe that those kind of regulation thing is going to better way in near futures, because Southeast Asia and East Asia and other Asia always getting more closer and closer. So they are more incentivized to open the market because they are already enjoying some capital deployed from the foreign investors to generate a new digitalized industry. And capital side, I think in case of Korea, we are very beneficial from the many sovereign funds. Because our Korean government always encouraging the foreign activity, because our domestic market is somewhat a little bit limited. So our startups or mid-sized company always having a motivation to go to the abroad. In that sense, even we are GP of the Korean, but sometimes we are beneficial from the LPs from the Korea side to invest into Southeast Asia. So this is one of the advantages in another country. Mostly, generally thinking, normally the many private LPs don't want to invest into Korean GP who are investing into Southeast Asia. But thank you for the sovereign funds. We always having a chance to get some capital, LP side of the capital from the sovereign fund, and then those kind of activity can encouraging the global investment. And then so going on to the global investment during the, let's say, the 10 years, then also we have a chance to we have a chance to make the Korean startups go to Southeast Asia or the East Asian country to enlarge their market. So that could be a start from the sovereign funds help. And investment activity also quite important. In case of the Korea, we have some of higher barrier to entering the VC, instead of the VC, instead of the GP as a venture capital, because they require some certain amount of the capital paid in capital or certain amount of balance sheet situation. But investment should be investment. So if in order to increasing the more global investment, the policymaker more open to the investment market to set up the GP or fund more easily. And plus somebody who has some track record, not only in Korea, but also the Asian market, then those guys, it should be more easier to open the fund to invest into globally.
All right, thank you very much for sharing with us your thoughts. We've been talking about how to boost cooperation between ASEAN and Korea through investment. My guests this afternoon have been Charles Rim, the general partner at Access Ventures, Sang Han, the partner at Central Ventures, as well as Eric Yu, the managing director at KB Investment. Gentlemen, thank you so much for taking the time to join me today, and I really hope we get to do this again soon.
Thank you for having us.
All right. We promised you one more round of pitches. And just a quick reminder, if you're just tuning in, it is the ASEAN-Korea Global VC Conference. Now, this next round, this final round, we are touching on ASEAN startups. And you know the various pitches that they have. If you're on the Switch platform, you're more than welcome to visit their digital booths. In case the internet connection does have a few bumps here and there, visit the digital booths. You can leave your questions there. I'm sure they'll answer. And if you're watching us on YouTube Live, feel free to leave your questions in the comments section. I believe during the allocated 10-minute slots, if the presenters are able to address them, they will do their best. Okay, so we're going to take a look at these next four startups that are pitching for your attention. We have 10 minutes per startup, and we are going to start off for the next 10 minutes if you'll give your attention to Z My Home. Take it away.
Good afternoon, everyone. Good afternoon, everyone. Okay. Hi, good afternoon, everyone. I am Natapon, CEO and founder of seemyhome.com. We are #1 trustworthy property platform in Thailand, and we have helped selling and renting 30,000 residential property. Let me share how we did it. Why is a trustworthy platform important? Please take a look. Selling a home can be complete within 3 months in developed countries. However, in Thailand, we spend a year on average. Clearly, there must be different in some way. I'm explaining the three key differences from the developed market and Thailand. Firstly, the government of developed market enforce the disclosure of transaction of home to the public. This is necessary for buyer and seller to make decision confidently. In addition, this information can also be used by the agent and property appraiser. The second, they control agent quality by strict education, examination, and licensing. The listed price of home are appraised and agreed to between agent and owner before signing an agent agreement. Then the agent became the representative to sell their home. In a mature market, a central platform is the most effective tool for selling houses. In the USA, 90% of home transactions are sold through a multiple listing system or MLS. In the MLS, listing details are rigorously checked for accuracy, and its status is continually updated. Fraud cannot exist on these platforms. This helps buyer and agent to easily find the next potential home. Platforms those are market leader in explained environment have a very high chance to become unicorns. There are 4 groups of property platforms from 4 countries that are worth a total of $54 billion. In even a smaller country like Australia, the REA group is worth over 14 billion. Not only significant in valuation, this platform also generate a healthy revenue. Their revenue was worth a total of 2.8 billion in 2019. But of course, this environment has not established yet in Thailand. There are over 100 property websites in our country, but people still suffer selling and buying houses. They are filled with duplicate, fake, and outdated posts that cause misunderstanding about market situation and prices. Therefore, they fail to match most users. Seemyo Home has built the solution. During the past 4 years, we educate home sellers about the market price by prices of listed homes that are actually contracted by the buyer. Second, we allow the owner and legally assigned agent to list on our platform. And third, which is very important, Our platform is clean and regularly updated. This allows users to find potential home much faster than on the competitors. This is the proof of our hard work. We help owners sell and rent over 30,000 listings. Next, I'm explaining how we develop our business model parallel to the solution. For the first one, with our transaction price, we sell a pricing tool plus marketing ads that allow the owner to offer their home directly to interested buyers. Our tool is simple but powerful. We educate home seller by a notification when any listing in the same neighborhood are contacted by buyer or agents. The notification include house detail and prices of those property. In this way, our seller can compare their house price and adjust as needed. Next, if the seller thinks the buyer may interest their property, they can make offering directly to the buyer. Our tool is very well accepted. Since launching, we sold it to 2,500 users and generate over $200,000 revenue. Currently, our average selling time is 8 months. This is 40% faster than the market average. In fact, some of our users have been able to sell it less than a week. We estimate that the addressable annual market size of our tool is $100 million. And we estimate that the total Southeast Asia market is $600 million. For the detail of solution number 2, we develop our own agent service serving high density area and partner with professional broker to earn through revenue sharing. This slide shows the separation between the direct service and the agent service. Here, See My Home allows the legally assigned agent to list on our platform, so all listings are unique and can be accurately updated. Our representative agent can post and use our tool. Then, if the user or another agent want to co-broke, we receive a commission of 0.5%. We estimate that the market size of the total agent service in Thailand is about $1.1 billion, which is about 5% of the total Thai housing market. This doesn't include agent fee from rental service. In May this year, we opened an agent office at the intersection of New Bangkok CBD called Ramana Intersection. Although it was after the COVID pandemic, we still closed over to $20,000 in commission last month. We are generating $100,000 per office per month with 30% margin after it's fully operating. For the third key of success, we will present how we build the trusted platform and examine it to how to acquire all listings. See My Home verify all listings to make sure they are not duplicated. In addition, we regularly update listing status monthly. This shows all units on our platform are available and they are priced as shown. A clean platform is similar to shopping in a great mall. You can find potential home easily compared to other websites where users have to endure many months of surfing through fraudulent posts. Going by the fastest search result, currently we are the first in mind for agents if they want to find property. As I have mentioned, dominating the market is very important to improve the transaction, and these are our strategy. First, since we audit all listings, buyer can find a home fastest in the market. Second, since data on our platform is transparent, it creates fair competition and buyer can get the best price. And third, we allow SI agent to post without any cost until a successful sales. This will attract all listings in the market and eventually dominate both listing and buyer traffic. Currently, we are raising Series A funding from the pre-A investment lead by Bong Angel. Our revenue has grown 500% in past 6 months. By enough funding to expand our sales and service team, we target to IPO into 2024 with an annual revenue at $23 million. This will provide a company market cap of 300 million based on the PE compared to all tech company listed in Thailand. Our team of founder have over 20 years of property market experience. Myself, I used to work in CBIE Thailand as a senior manager in consulting department. A good friend of mine is our CDO and has worked with me since our previous business together. Our CTO has gained long experience in building a successful website. His portal TechXI used to gain 3 million visits a month. There are many property platform unicorn all over the world. The previous and the other property platform in Southeast Asia cannot really solve the seller problem and gain sustained revenue. At present, See My Home has the best potential. We are the only one that is reliable and we will completely dominate the market if we acquire a majority of listing. We can contribute other get benefit to the market as shown below. And we are currently raising a 3 million for building the first unicorn of property market in Southeast Asia. If anyone here would like to join our future success, I invite you to contact me via the email shown below. Thank you.
Thank you very much. We just heard from Z My Home. Again, we are in the pitching round right now. Each startup will have 10 minutes to make their pitches. It's time now to turn our attention for the next 10 minutes to AgroMe. It's over to you guys.
Hello. Hi. My name is Dr. Vanessa Teo, and I am the founder and CEO of Agro. So I guess, all right. So for Agro, we have identified that smallholder farmers face a lot of challenges. This was something that I guess I discovered while I was doing my PhD in agriculture systems modeling back in 2014, realizing that a lot of farmers in Asia, especially, were having difficulties such as having low ROI in terms of their business and low farm product quality that didn't allow them to enter various markets. And due to their small sizes, small sizes in terms of their farms, 1 to 2 hectares in size, really cause a problem when it comes to bargaining with the current buyers in the market. So what does Agrom do today? We are a platform that enables farmers to have much more sustainable business by helping them to improve their product quality through certification and quality assurance processes with us as an ecosystem. And with that, we connect their products to various distribution channels and markets. So we are a platform, an aggregator of high quality farm products that started off in 2017. So the way that our solution or our pathway works for our farmers, we onboard our smallholder farmers onto our mobile application where we create a digital footprint of their farms. So location, their size, and what crops they're producing and their harvest times. We also provide certification training that enables them to get a regionally certified logo that will actually allow them to enter higher value markets and also fetch higher value, higher yields in terms of their farm. Through that, we then connect them to our market distribution, where we connect them to wholesale buyers and also direct to consumers platform, direct to consumers as in households. So with Agrom today, what has happened is that we have a platform of about 4,500 farmers spread across Indonesia and Brunei. We launched into Indonesia early in January 2020, where we opened up in Banyuwangi and worked with the local government. And with that, we have about 3,000 farmers. And in Brunei, we are the only training and certification company that is certified by the government to help farmers to get certified and digitize them with our platform. So with our software, we collect all sorts of data in terms of how they do their planting, how much fertilizer they're doing, and what markets they're currently selling at. And with this data, we develop a more optimized supply chain information to help the farmers make better decisions. Currently in 2020 April, due to COVID, a lot of the farmers that we were working with were having very difficult times in terms of trying to sell their produce. So we launched agromarket.com, where we distributed the produce directly to households. So we picked up orders, we collected orders, picked up the produce and sent them to homes. With that, about 9 months later, we have expanded further into other grocery items. And also we have partnered up with one of the largest retail stations in Brunei, Brunei Shell Marketing, whereby we're working towards accessing all the retail stations, petrol stations in Brunei with 400,000 market access right now, so that we could actually distribute all across the country. And right now we raised our pre-series A last year in Singapore with Serana Capital, which is a partner with Ebb and Flow Group, where they have access to hotels and retail chain, part of the Ebb and Flow Group. So creating direct distributions from Brunei to Singapore and also from Indonesia to Singapore. So in terms of our traction, we've been growing since 2017 as a farm management platform, and then going into certification, quality assurance within the platform to ensure our farmers improve. And with right now a total tonnage of 500 tons of different kind of produce with different categories. And we've received government endorsements throughout BIM IAGA, Brunei, Indonesia, Malaysia, Philippines in Palawan last year, whereby we are working towards a project of the digitization of smallholder farmers in the BIM IAGA regions and connecting them to various markets. With our platform, we develop a platform subscription model for the farmers that receive the farm reports. But at the same time, we provide certification training both online and offline. And we provide sales commission, which is more of a marketplace business model where they load on to the platform and we take the commission. And with these more advanced quality plans, we provide more detailed farming reports that they submit to the government for quality assurance purposes. So in terms of where we're growing and where we see ourselves positioning in terms of growth in ASEAN, we are with our Indonesian partner, we are looking to onboard the next 40,000 farmers up till 2023. And with that, total produce an average about 10 million kilograms of produce sold via the Agrom platform as an aggregator of produce, local certified produce in ASEAN. And then with that, we also would like to integrate more of the GAP certification training programs, part of that, to ensure that the farmers have long-term sustainable plans in terms of uplifting their farms, rather than just focusing on market, but helping them improve over time as well. So currently, we do have competitions in the market, various ones being Crop Farm X based in Singapore, whereby we believe that they focus a lot on blockchain technology in terms of understanding the supply chain for farmers, but they also connect to different markets. So with all these marketplace players, we would like to position ourselves whereby we'll be selling our certified high quality products to various marketplaces that would be interested in helping supporting in the development of more sustainable farm sourcing that is currently a huge challenge in ASEAN. This is our team. So basically, my background, I have a PhD in agriculture systems modeling that I did with IBM, and beyond that, I did a MSc in environmental engineering in Imperial College London and a BSc in biology, where I spent a lot of years trying to identify how to develop more sustainable systems, especially in the agriculture sector. And my teams are a full range of agricultural officers that have been trained both formally and by the government sector to become agricultural auditors. So they're the ones that go out to develop the trainings, and at the same time, a growth team that focuses on identifying new distribution channels or new opportunity for growth in the region. Currently, we have an advisory team, one of them being Dayudara Pramata, who was the ex-VP of Gojek, and currently running her own startup, Pin Home, where she's launched a real estate platform. And Sun Lu, who is the ex-CEO of Brunei Economic Development Board that started off as in 2017 as a mentor and advisor and helping us grow the business. So as a vision for Agrom, really, we're looking to create a lot more efficiency in the current supply chain of farming. So there are a lot of inefficiencies due to the lack of transparency and lack of data available for farmers to make decisions. With the data being collected on a daily basis, we develop various prompts and notifications to allow farmers to do a lot more better farm management in their process at a ground level. But over time, what we see that we allow also suppliers make better decisions in targeting what kind of farmers they are selling their products to. And overall, the consumers really win in terms of allowing us to access better, higher quality products that is being farmed in a more sustainable way. At the end of the day, we feel our farmers are improving their yield, but not only that, their product quality, which allows them to access higher value markets, making their business a lot more profitable. And having this ecosystem that we're building, an aggregator of high quality produce, we see it enabling a lot more solutions that can be implemented to help, such as financial solutions, things like that, and agri-insurance online, things like that. So we are raising our Series A at the moment, and the main thing that we're doing with the raise is to ensure the product development. A lot of the farmers that we're working with in various areas in Indonesia do have particular targets and key requirements. So we're aiming to build the software to be a lot more responsive and at the same time more targeted to our target users. And research and development in terms of integrating different technology into the platform to enable better services for the users themselves, of the farmers, and connecting and allow for transactions and payments for our buyers on the other end of the platform. And at the same time, we're looking for key business partners throughout the region that would like to either be a buyer or be a supplier of produce from within their local farming community. So yeah, that's the end of my presentation. Thank you.
We just heard from Agrom. Thank you so much for taking the time to pitch to us. Again, if you want to find out more of any of the pitches that you've heard throughout the course of this entire day, you're more than welcome to visit their digital booths. I'm sure you could also leave your questions there as well. We have 2 more pitches to go. Again, the rules are simple. 10 minutes. They'll tell you everything that you need to know about their company. I believe the next one is called Scream. It's over to you.
Okay. Hello, can you hear me? Hello? Hello? Let me just check.
Yep, we got you loud and clear.
Okay, brilliant. Let me just reposition my camera. This is great. And how do I actually see? Oh, my presentation's all perfect. I get it. Okay, great. Very nice to Well, thank you very much for inviting me here today. My name is Ian Chapman-Banks. I'm the CEO of Scream Technologies, and we are a pure play artificial intelligence company. And what we are able to do at scale is by using our artificial general intelligence engine, what we're able to do at scale is predict human behavior. So our AI engine is a series of algorithms that actually enables it to find overlaps and patterns. Now, to do that, you have to have vast amounts of data. So what we are able to do is pull down, acquire every search term that's ever searched in a day in every country in the world, every link and every backlink moving between websites. It's all public information by IP address of the website. And then we crawl every website for content and context. So imagine if we have search, and then somebody goes to a website, and somebody goes to another website, and then somebody goes to the brand's website, say Mercedes. Now this is done 5.2, 5.3 billion times a day across 40 countries. Imagine fusing that data together on the same numerator. You're able then to build digital journeys which enable us to predict human behavior. There's two big markets we're going after. Digital media advertising, where we built out an ecosystem in the digital media advertising market. And then secondly, is we have contracts, for example, with DARPA, which is the Defense Advanced Research Association in the US. So we have contracts with the US intelligence agencies. The biggest data fusion project in the world is ourselves in Rakuten, where we're actually running Rakuten's digital marketing in Japan, whereby taking their data, taking our data, fusing it, and then we built one of the biggest digital ad platforms in Japan outside of Google and Facebook. There's a list of brands. We're very strong in pharma. We are working with 14 of the biggest pharma companies in the world, and we have MSAs which cover over 100 countries in the pharma world. And you can see the brands that we're working with. We have hundreds of brands as clients. Just in Japan, we have over 50 brands that we're working with on a daily basis in Japan via Rakuten. We are a Singapore headquartered company. We've raised significant amounts of money, $13 million. We're doing a raise for 30 million. We have over 180 people. 160 are engineers and data scientists. And we're putting together a whole series of growth strategies for enable us to actually grow the business exponentially. So in the digital media world, there's two really big problems. In this $250 billion business, most people don't click on ads. Most ads are not viewable. What the problem that we have solved is that for 1,000 ads that are served, on average, only one has clicked them. In our world, when we serve 1,000 ads or 1,000 impressions, we get 30x plus response. In other words, we are 30x more productive than any of the advertising agencies are able to achieve. And what have we done? Why did we do this? We built the world's first artificial intelligence digital media buying marketplace, where our engine, our audiences, and our inventory is curated, bundled together, and we're providing a marketplace for the advertisers, for the brands, for the DSPs, SSPs, ad exchanges, and publishers to actually trade their inventory that we bundle together to find the best website at the best time with the best ad, and it's all done autonomously, and it doesn't cost the brands and doesn't cost the agencies any money whatsoever. And the performance is 30x what they get. In the enterprise world, we have applications in enriching CRM, government intelligence, COVID-19 tracking and tracing. COVID-19 tracking and tracing, government intelligence and fraud detection is exactly the same platform. And then the CRM is just exactly the same platform, but we import customers' information into it, customers' CRM. So in the intelligence world, we are the only company in ASEAN that has been onboarded with DARPA, which is the foremost research institute, and we have 40 of the smartest guys in Maryland building construct around what we're doing. We're the only company in Southeast Asia that has contracts with the US intelligence agencies, and it's just expanding out into Europe and Canada. The only company ever in Singapore to be onboarded at DARPA, actually probably in ASEAN, the only company in ASEAN ever been to be onboarded with the US intelligence agencies. Contact tracing is being deployed in numerous countries, and we work very closely with the Ministry of Health here to bring it up at the height of the crisis. And in the pharma world, we have contracts in 67 different countries, over 300 projects this year, where we're actually, for our pharma clients, understanding what doctors are thinking, what content they want, and we build very granular insights around the life of a doctor, a HCP in any country, in any language, and then working with our brand clients, such as GSK, J&J, Pfizer, AbbVie, we then actually send them information on the next website or the next Facebook feed that they go into. And then we also are helping what we call patient recruitment. So right now in the United States of America, we are running very intense programs around the COVID-19 vaccination program and finding what people are thinking. What do they think about the COVID-19 vaccine? Who are the anti-vaxxers? How do we block the fake news? And how do we get the right news to the right people at the right time, using insights and using our media buying tech stack? And we'll be doing this around the world in the COVID-19 vaccination journey. So that's just one example of what we're doing, is recruiting patients to go into surgeries to go and get the vaccination. And then in the fraud detection space, we've actually been very successful in deploying this. And the MAS in Singapore knows us very well, and we've actually been able to detect billions of dollars of money laundering at source. And kind of the strategy and investment highlights. Essentially, what we're doing is growth. We're actually making money at the moment. And really what we want to do is be able to file for at least 25 to 30 patents, build a whole new series of tech stacks, increase the headcount. We need to hire another 250 people next year. Of those, 200 will be engineers, and we're looking to centers to locate them in, because I think we're we'll be hitting 200 AI engineers in Manila, which is probably the capacity. So we're looking at places like Cambridge, England, Oxford, England, London, that has centers of excellence around AI engineering. We'd love to do it in Singapore, but I'm not 100% sure whether the Singapore really wants to kind of support our initiative, but that doesn't matter. We're based here, our HQ is here. And then really kind of the investment highlights is really around, this is a proven technology. We've got customers, they're coming back to us. We constantly increase pricing. We're insanely profitable, in the media buying 50%, in the government intelligence between 80-90% gross margin. And we're expanding very quickly, and we built such an advantage. It's going to be hard for agencies ever to catch up with us. And then the defense world, we are perfect partners for a very well-known company called Palantir, as we bring data and insights into the company, into the agencies, and then Palantir visualizes them. So we've been very successful in that area. And let me go back. So that is the Scream story. We're looking for $30 million US. We've got a couple of term sheets already, and Singapore based. My background is I was early in Apple, Steve Jobs, Tim Cook, that era, and then moved on to Obama's team in Seattle, and then eventually became the CEO of Motorola in China, and then Asia, and ran a $6 billion business with Motorola, and then came into Singapore, helped sell Chartered Semiconductor, delist it off the NASDAQ and SGX, and part of the team that sold it for $4 billion to the Abu Dhabi government. So that's kind of my background. Thank you.
Thank you very much for sharing with us. That was Scream. We are down to the last startup to share their pitch. You have 10 minutes. It's over to you.
Okay. Thank you very much. My name is YT, and I'm the CEO and co-founder of Genexu, which is Malaysia's #1 full-stack fintech. Now, Genexu was founded back in 2012, and our core business is an online financial comparison marketplace called ringgitplus.com. Right. Over the last 8 years, we've grown to become the clear #1 online financial comparison marketplace, but we have evolved our products and services far beyond just comparison, and I'll be sharing more about that. We've raised over $30 million US from venture investors, global venture investors such as Experian, the world's largest data and credit scoring company, SBI Group from Japan, among many others. Another milestone, which we are very proud of, is that back in 2017, we were approved by Bank Negara Malaysia to enter the local fintech regulatory sandbox, essentially to act as a digital insurance broker. Now, Ringgit Plus, which is our core business, attracts almost 2 million visitors per month. We have over 300,000 followers on social media. We've generated almost 2 million leads to our banking and insurance clients since we first started. We've built a database of 1 million+ customers. And today, about 80+%
of our visitors come from mobile. In terms of our competitive position, I believe one of the best metrics to use is Google branded search. And you can see from these charts here on the right of this slide that Ringgit Plus generates anywhere from 5 to 6 times more branded search than our nearest competitor. So we are clearly top of mind for Malaysians searching and comparing, searching for and comparing banking and insurance products. So, what really matters to the business? What's really differentiated us, and at our core is what we like to call the 3 C's of customer centricity, right? So the first thing that we've always wanted to be the clear leader on is choice. So we've always made sure that we provide more banking and insurance products than any other site, so that consumers have more choice with Ringgit Plus. Secondly is channel, right? So yes, although we are a digital first business, we appreciate that consumers across Southeast Asia, many consumers still prefer to have some kind of human contact. That's why we still run a call center, and we also have face-to-face agents, right? So we allow consumers to interact with us through whatever channel that suits them the best. And the third C is certainty, right? And I'll be sharing more about how our strategic investment and partnership with Experian has really transformed our business on this. In terms of the financial products that we compare on Ringgit Plus, the main products today are credit cards and personal loans. We also have fixed deposits, car insurance, and medical cards. And from 2021 onwards, we'll also be launching more products around financial planning and savings and investments. Now, one of our core differentiating products over the years has been something we built called Express Apply. Now, we launched Express Apply back in 2015, and it was the first digital straight-through online application for credit products here in Malaysia. And it was really the first step towards realizing our vision of enabling consumers to just pick up their phone and get access to any banking or insurance product anytime, anywhere. So instead of having to drop a lead and speak to a call center agent, we allow consumers to complete the entire application right there on their phone. Now, this was better for our banking clients because it reduced the need for people and paper-based sales processes. It was better for our consumers because it was far more convenient. And it was also better for us because it actually allowed us to collect far more data on our consumers than anyone else. And the reason that data matters is, if I turn the clock back now to 2018, when we entered into a strategic partnership with Experian, one of the reasons for that strategic partnership was the data that we've managed to collect throughout our history. And when we partner with Experian, we now leverage their credit scoring know-how and technology to credit score every single customer who applies for a banking product on Ringgit Plus. And we use that credit score to match consumers to the bank that is most likely to approve them. And I'll just skip on to the next slide to show you why that matters. So when we first started our business and we just had basic web forms where consumers could drop a lead, out of 1,000 customers applying for a banking product, only about 3% or 30 out of 1,000 consumers would be approved. After we launched Express Apply and created a digital straight-through application, we managed to increase this to 13%. So now, out of 1,000 customers applying for a banking product, about 130 would be approved. But now with Experian's credit scoring and score-based recommendation engine, out of 1,000 customers, we're able to get up to 400 customers actually approved by the banks. And again, we do this by scoring the customer and matching them to the right bank for them. And you can see here, that's almost a 4x increase from before. Now, this is a clear win-win for all of our stakeholders, right? For our banking clients, they get higher quality customers and they have to spend less time and resource processing applications for consumers who will never be approved anyway. Consumers have a much better experience with Ringgit Plus because they are far more likely to get approved. And for Ringgit Plus as a business, we are able to realize far better conversion rates and obviously far better margins from this. But going beyond just business, right, I think something that's always been very core to the brand and to all of us is how we help our consumers, is how we help Malaysians improve their personal finances, which is why Ringgit Plus over the years has also grown, right, to become Malaysia's #1 brand when it comes to financial education and financial literacy. And the best example of this is our annual financial literacy survey. We just launched the results of our 2020 survey about a month ago in early November. The survey is picked up by every major news outlet, but beyond that, right, it is also officially endorsed by our regulator, Bank Negara, and we are the only publisher in Malaysia which has our financial literacy and our financial education content endorsed by the regulator. And again, this is very important to us because it's not just about enabling access to financial products, it's also about actually helping our consumers improve their personal finances. Quick snapshot of our leadership team. Now, Janexu is quite unusual. I am one of 6 co-founders, and all of us are still in the business today. But as you can imagine, right, as the business has grown and become more complex, we've worked to professionalize our leadership team. So just to give you one quick example, we have Supan Kusuma, who is now the CEO of the core business, Ringgit Plus. He has over 25 years of management experience in banking, and he's run consumer banks in Malaysia, Japan, and Indonesia. Right, so that is just one example, right, of how we've really started to professionalize and upgrade our leadership team. So what I'd like to wrap up with is to share a little bit about what's coming up over the next couple of years. Right, so I mentioned briefly, right, that we will be launching more savings and investment products in 2021, and the reason for that is that we were just literally end of last week, we received approval from the Securities Commission in Malaysia for our financial planning and advisory license. So now we can officially give advice to our consumers on how to better manage their money. So we'll be using that license to launch new financial planning and savings and investments products for Ringgit Plus in 2021. And secondly, one of the kind of really exciting macro trends for us will be the launch of up to 5 new digital banks. Right, so Bank Negara will be going through the process, right, to approve up to 5 new digital banks here in Malaysia in 2021, which means that in 2021 and from 2022 onwards, we're going to have several new competitors enter the market, right, which means more choice for consumers, more competition among our clients. So it's going to be an extremely exciting time for the business. And with that, I'd just like to wrap it up and thank the organizers and all of you for the time today.
All right, thank you very much. We just heard from Janesh here. Just a quick recap of the 4 startups that pitched. Z My Home, Agrome, Janesh, as well as Scream. We're leaving up the slide right now. It is, of course, the ASEAN-Korea Global Venture Capital Conference. And, you know, we really appreciate you taking the time to join us for this entire day. But if you have any inquiries, I would like you to take note of this email. You'll be able to see at the bottom right of your screen is Mingyu Lee. This is mingu.lee@kvics.sg. If you have any inquiries you'd like to reach out, that is the email address that you can reach out to. And with that, it pretty much takes us to the end of today's ASEAN-Korea Global VC Conference. Certainly has been a very insightful day with lots and lots of experiences that are being shared. Lots of pitches, 14 in total today. It's been quite exciting. Of course, the event will be back again next year, and it'll be hosted by one of the member states. And, you know, we're all really hoping that we'll be able to do this in person, face to face, because hopefully by then we would have gotten over this COVID-19 crisis that we're facing. But until then, I would like to wish you a wonderful year-end season. My name is Elliot Danker. Take care and stay safe.